Welcome back to Worldwide Exchange. Shares of NVIDIA looking to add to yesterday's 1% pop as investors brace for the chip giant's results after the bell tomorrow. Those numbers will be the latest test in investors' faith around the AI trade. For a closer look at the potential risk to the markets around NVIDIA's results, let's bring in Tim Quast, founder and CEO of Market Structure Edge, which provides a quantitative decision support platform for active traders. Good morning, Tim. Thanks for joining us.
Frank, it's nice to see you. It's it's the middle of the night here in Steamboat Springs, Colorado, but the only thing I had to do was sleep, so I might as well join you.
Well, Tim, we really appreciate having you here. So we got to get down to business. It's a really busy day. So I'm looking at the estimates when it comes to NVIDIA for earnings. I'm going to pop them up right now. I was looking at something else for the Fed, to be honest with you. Revenues forecast to increase by 53% year over year, EPS by 48% year over year. But you say these estimates, they keep creeping up, which reduces the ability for an upside surprise. What do you potentially think that means just for NVIDIA, the stock itself?
Well, so the way that we think about the movements in the market is mathematical. Now you put the whole picture together, the sell side's estimates, the expectations from investors, and how people bet on outcomes. The volatility around earnings is up 50% since the pandemic, and it's a reflection of what happens behind the scenes. People make leveraged directional bets, people and machines. Those trades are executed by machines. The market is 24-hour global electronic. The U.S. market is 100% electronic, 99% algorithmic. And so what we like to look at is the demand-supply balance. Ultimately, you put behaviors together, and behaviors have different postures. And you can get some idea of what may occur. No one knows perfectly. I can tell you what the data indicate in NVIDIA. There are two things that stand out to me. Number one, demand is the weakest since early May. There has not been insufficient demand. That is, if you took a 10-point scale, you said a 5 or better, you have excess demand. NVIDIA spends a lot of time above 5, spends a lot of time at 10. It has. It is now below 4. I don't know what will happen, but the last time that happened was in early May. And if you look at every time that NVIDIA has had demand that's below 5, if you normalize to a 10-point scale, the stock has declined. Then you look at the supply side. So we treat supply as Reg SHO, Rule 201, short volume data, not short interest. Short volume is a daily read. 55% of NVIDIA volume, believe it or not, is short. Now you might say, well, that's a staggering figure. 51% of the S&P 500 is short. So you put that together, you would say there's downside risk.
That's a lot to put together, Tim. I'm going to be honest. You hit us with a lot. Very quickly, I got time for one more very quick question. The options market's implying about a 6% move to the upside or downside for NVIDIA. What do you think that means for the broader market? We have to keep in mind NVIDIA has about an 8% weighting in the S&P.
Well, the market has topped demand and rising supply. So if those bets are correct, and we don't know, right? We'll see how it goes. There is downside risk. It reminds me of Herb Stein's law. Something cannot last forever. It will stop. And we've had a market with a relentless upward bias, and at some point that will stop, and NVIDIA could cause that. I don't know what will happen. We'll see, won't we?
Tim, we got to leave it there. Listen, man, thank you for getting up in the middle of the night, as you mentioned. Go ahead and enjoy those geothermal hot springs up there in Steamboat Springs. Rest, relax, because it seems like you got a lot on your mind ahead of NVIDIA. Thank you again.
Absolutely. Thank you, Frank.
Coming up here on Worldwide Exchange, President Trump potentially turning his trade focus on furniture. The CEO of Ethan Allen standing by. And as we had to break a check on some stocks on the move this morning, Generac shares falling on a rating downgrade from Citi. Another downgrade, this time on PDD Holdings from New Street. Those shares also lower. Okta shares higher on an upgrade from Canaccord Genuity, raising its rating and its price target. Okta also set to report its earnings. Stay with us. Coming back with much more in just a moment.
broadcasting.
Welcome back to Worldwide Exchange. Big story this week. President Trump moving to investigate possible tariffs on furniture imports in a push to bring more manufacturing back to the U.S. Results from that investigation, they could come within the next 50 days. Ethan Allen, which already has a very large U.S. manufacturing presence, getting some fresh attention on that news. Chairman and CEO Farouk Kathwari joins me now in a CNBC exclusive. Good morning. Thank you for joining us.
Good morning. Good to be with you.
All right. So you do about 75% or so of your manufacturing here in the U.S. You do a lot other manufacturing in Mexico and about, I think, 10% in Honduras. So you're pretty well positioned. Also, that Mexican manufacturing is covered under USMCA. What do you think this means for your business that a lot of your competitors are going to face potential tariffs, but you won't?
Yes, well, first of all, good to be on with you. We are positioned well. We are fortunate. We started about 91 years back in Vermont. Then we went and expanded manufacturing all over the United States. We are positioned well because of the fact we've taken a lot of steps in the last at least 25 years. Keep in mind, 25 years back, we had 22 manufacturing plants in the United States. We had close to 10 national distribution centers. We had 100 retail service centers. We had about close to 250 stores. We had to reposition it. It takes time. Today, we have manufacturing in Vermont, in North Carolina, and 20 years back, we went to central Mexico, then we went to Honduras. We took our national distribution to one major national distribution and another secondary one. We took these over 100 retail service centers to about 20. Mm-hmm. We repositioned our retail. So in other words, it's not just a question of manufacturing.
I understand the strategy. It's kind of about being here U.S. based, and it sounds like staying true to your brand as well. As you mentioned, you were founded in Vermont and expanding based on your brand and your brand promise of being classic American furniture. Oh, by the way, I want to correct myself. 75% in North America, 45% here in the U.S. So going forward, Ethan Allen's a high-end brand. You won't face tariffs. Does that, do you think, matter to your customers? Do you think they're price sensitive and they'll see furniture from a Wayfair or whoever else and say, oh, there's a tariff on that, that's too expensive, I'm going to go to Ethan Allen instead?
Well, there is, of course, a factor of price, but I think it is much more than that. It is a question about making sure that we have the right products, we are able to service it, we are able to have the right quality. We have one level of quality right across. Even the products that you mentioned, we make in Mexico, and for instance, our upholstery is made in North Carolina and Mexico. Same exactly level of quality, same products. Same thing in Honduras. We make some of our wood products, and we do the same in Vermont. So the level of developing quality is important. Yes, certainly, price is a factor, but I think maintaining the great level of quality, the great level of service is as critical as the fact that we have the ability to make it right here in North America. Very, very important. So it gives us a big advantage.
So Farouk, I'm sure you're aware of today's news. I'm asking you to comment on the dispute between Fed Governor Lisa Cook and the president, but just the idea of rate cuts and a more aggressive rate cut strategy. What would that potentially mean for the housing market and in turn your business and from your perspective?
Yes, you see, the consumer has been impacted with all what is taking place. It is not only the question of increased prices, there's a concern of what is taking place. We are positioned very, very well, but the consumer is concerned. Our business is holding up. It's holding up because of our network. We have one of the largest interior design network. We have relationships with our people. If that was not the case, it would be a problem. So I think that yes, we are going to be impacted. Markets are going to be impacted. What is taking place in the issue of interest rates, in the issue of people being concerned about what's taking place overall. People are concerned. There's no question about it. We just happen to have it positioned well so that we are benefiting from it. If that was not the case, we would have been much more of an issue like everybody else.
All right, Farouk Kathwari, really appreciate you joining us, CEO of Ethan Allen. Have a great day.
Thank you.
All right, coming up here on Worldwide Exchange, more of the market fallout over President Trump saying he's firing Fed Governor Lisa Cook and whether the president's growing Fed fight fuels another overhang for investors looking at futures and they're right across the board. We'll be right back after this. Welcome back to Worldwide Exchange. Take a look at futures on the back of the possible firing of Federal Reserve Governor Lisa Cook. In the red across the board, right now the Dow looks like it would open about 55 points lower. Fractional declines for the S&P and the NASDAQ. With that, let's bring in Simeon Hyman, Global Investment Strategist at ProShares Advisors. Simeon, good morning. Thank you for joining us. I think we've got to start with the futures. Are you surprised that the reaction isn't bigger in the futures market?
No, because earnings are holding up. S&P 500 earnings are up 10% year over year, and NASDAQ 100 earnings are up 34% year over year. And in this context of U.S. exceptionalism, look at what's happening in France today. So you still have strength in the U.S. market that can be resilient in the face of some of these headwinds.
Right, by the way, for people just joining, the French Prime Minister called for a confidence vote coming up in September. That's weighed on the broader European markets. The CAC's the biggest laggard. I want to go back to the U.S., though. We're really focused on the U.S. today. What do you think this could potentially mean for the idea of Fed independence and American exceptionalism, as you just mentioned? Part of the American exceptionalism narrative is that we have an independent bank that makes decisions based on data and not necessarily on political motivation.
I think the relative muted market reaction tells all of us that we're still in pretty good shape with respect to Fed independence. But look, you have to be careful of what you wish for. Even just this little whisper of a little bit of deterioration of that is selling off the long end of the curve a little bit. You have to remember that the Fed only controls the short-term lending rate, and if you lower that too much, you get a steepener. It already happened the last round of cuts, resulted in higher longer-term interest rates.
Yeah, we were showing the kind of the spike in the 2 and the 10-year curve, as you mentioned. The Fed has the biggest influence over the 2-year, which actually moved down about 7-8 basis points from the level we saw yesterday. I want to get to your word of the day. It's small caps. Your pick for us today is the ITWO ETF. It's the Russell 2000 high income ETF, so a small cap income focused ETFs. Is this a pick based on the idea that we're going to continue to see rate cuts, or at least pressure on the Fed to cut rates, which would benefit cyclicals and small caps?
Yeah, this is two parts. So first, there is room for the Fed to do 2 or 3 cuts and not really impact the long end of the curve, because that's still consistent with even 3% inflation. And that will benefit small caps better than large, because small caps are more leveraged and they have shorter maturities. So that's part of it. The other piece is now you're going to have lower rates on your money markets, more challenges from income from interest rate and bonds. Better to get some equity income, and that's the story.
Simeon Hyman, thank you for joining us today. One more quick look at futures before we let you go. In the red across the board, but muted declines across the board. The Dow looks like it would open up about almost 50 points lower. That does it for us. Squawk Box starts right now.
Good morning. President Trump saying he is firing Fed Governor Lisa Cook following allegations of mortgage fraud. Cook says she will not resign. Meanwhile, the president says he's interested in deals similar to the government taking a 10% stake in Intel. We're going to speak with Commerce Secretary Howard Lutnick about that. And the Trump administration putting other countries on notice now over taxes on American tech giants. It's Tuesday, August 26th, 2025, and Squawk Box begins right now. Good morning and welcome to Squawk Box right here on CNBC. We're live at the NASDAQ market site in Times Square. I'm Andrew Ross Sorkin along with Leslie Picker this morning and Wilfred Frost in all week for this last week of August. But boy, is it a busy one. And every day has been a little bit busier than the next. Steve Leisman's also on set. We're going to talk about the situation at the Fed in just a moment. Do take a look at treasuries. Take a look at equities first. Let's show you where things stand. About 40 points off on the Dow. NASDAQ off about 12 points. The S&P 500 off about 3.5 points, close to 4 points. Treasuries, though, the 10-year sitting just at about, we'll look at it there, 4.298. Looking at the 2-year down to 3.711. And cryptocurrencies, Ether coming off now what has it been a 9% drop yesterday after it hit an all-time high. You're looking at Bitcoin, though, down at about $110,000. Meanwhile, story of the morning could become the story of the week, the story of the month. I don't know what to say. President Trump saying he is firing Fed Governor Lisa Cook over alleged issues with her mortgages. And Mr. Leisman, as I mentioned, is at the table. He's been up late digging into all of this, working the phones.
A lot of issues here, Andrew. The firing of Fed Governor Lisa Cook raises dramatic questions about the legality of the move, the independence of the Fed, and the outlook for monetary policy. The president saying he fired Cook for, quote, allegedly making false statements on one or more mortgage agreements. He said in a letter to Cook, the American people must be able to have full confidence in the honesty of the members entrusted with setting policy and overseeing the Federal Reserve. In light of your deceitful and potentially criminal conduct in a financial matter, they cannot, and I do not, have such confidence in your integrity. Cook, in a statement late last night, responded, quote, President Trump reported to fire me for cause when no cause exists under the law, and he has no authority to do so. I will not resign. I will continue to carry out my duties to help the American economy as I've been doing since 2022. Former Fed General Counsel Scott Alvarez telling me last night it's not cause if someone made an allegation that's untrue. To be for cause, she has to have an opportunity to explain her side of the story. We don't know what she told the banks about why she had two primary mortgages. I would note that Cook has yet to directly address the mortgage allegations, but many on both sides, both inside and outside of the Fed, have viewed the attack on Cook as political, part of an effort to strong-arm the Fed into lowering rates. If the president's removal stands, the Board of Governors would have only 5 of its regular 7 members. Chair Jay Powell, appointed by both Trump and President Biden, Vice Chair Jefferson and Governor Michael Barr, appointed by Biden, and Vice Chair for Supervision Michelle Bowman and Governor Chris Waller, appointed by Trump. The president has nominated CEA Chair Stephen Myron to a vacant spot. Replacing Cook would give Trump a majority on the board. Fed probabilities changing only slightly in the wake of the firing. September remained an 82% probability of a cut, but there was a slight increase to 42% from 34% earlier in the evening for a second cut in October. A Trump board majority would also open the possibility that Trump could eliminate the 12 district presidents, 5 of whom have voted any one time, effectively giving the president full control of monetary policy through sympathetic surrogates. Andrew.
I have a million questions, but actually Wilf asked a very good one before we began the broadcast, so I would actually like to hand the floor over to Wilf for that important question.
Thanks very much, Andrew. Which is, do you think Powell will come out and publicly back her?
I don't know. I think that the Fed chair may want to just sort of sit on the sidelines of this. I think other members of the board, I think, will back her in a sense of saying, we need to have a fact finding on this, and there is none so far. I asked FHFA several questions and they have not responded. I asked them how Bill Pulte came across this. Were they specifically targeting Fed officials? Were other Fed officials targeted? I asked the extent to which other people have been referred for criminal prosecution, if this is, and how widespread this is. So I don't know, Wilf. The allegation is out there, but whether or not that pertains and is a matter for cause is a really unclear question.
I think there's a question here. There's actually a whole bunch of questions, but you can hold two things in your mind at the same time. You can hold, and I think we've talked about this, you can hold in your mind that she may have done something inappropriate, incorrect, possibly illegal, we don't know, and believe that she's being prosecuted for political purposes. You think that's fair?
Absolutely.
Okay, so let's just assume that that's the case. My then next question is, you've been on this for the past week, you were in Jackson Hole. If what she did was an innocent mistake, so I'm just going on that side first, I'm surprised that she hasn't come out more publicly and said, look, this is what happened, this is the story, and I'm sticking to it. Why do you think she hasn't done that? Because if it was pretty simple, I think you'd say it's pretty simple, it's something you could go to court over and, you know, go down the line and follow that. If it's complicated and or it's wrong, you don't say anything up front because it gets more complicated as you go.
I don't have a good answer for that. I mean, I think that if you read her statements carefully, she has not responded to the allegations themselves. It may be her contention that the allegations are not relevant to the question at hand, which is the authority of the president to fire her as a governor.
Right. And
that's where she appears as if she and her attorneys are fighting this question, which is on the legality of the dismissal. Can the president do this? not whether or not there's actual
Right.
cause.
But there
to
have
do
been
this.
people who have left the board over controversies around
But
trading
not,
and other
not
things.
fired by the president.
Not fired by the president, no,
Right.
and I'm trying to think of some of the examples of people who stepped down over trading, for example, just a couple years ago. How did that happen?
There were referrals, I believe, to the IG, and probably the chair went up and put his arm around them and said, "It's time for you to go." And I think that's
Right.
important.
And this
in the
goes back
sense-
a little bit to Wilf's question, I think.
Well, it's important in the sense that it was left inside the Fed, but this is no longer inside the Fed.
Can I ask on the legal point though? Because she's saying I'm not resigning. So what is the legal stance? Like, where are we right now? Is it that she's been fired and she's appealing that decision, or that the letter that the president has posted publicly is completely irrelevant?
We are exactly where your question implies we are, which is nobody knows. I didn't even know.
So
to
she's
say-
still in place right now.
Let me just say a question, Wolf. I didn't even know whether or not to say in my report this morning that the president fired Lisa Cook. I don't know if she's fired. Do you know if she's fired?
No.
Does anybody
You know
at the
that
table?
he said that she's fired.
He said she's fired.
That is
Right.
that is
She
true.
says he has no authority to fire her.
That's why I wondered what Powell's going to say, because sure, next time they have a vote,
Right,
is
the
he
Fed
gonna
has to
cast
say
that
something.
vote?
If it's supposed to be inside the Fed and they're the ones that are technically in charge, if that's the argument,
I
then
think
they
you're
would have
right.
to say something
the
about
Fed
this.
chair has to say something.
Can I fast forward a little bit as well in terms of the fairly calm markets in light of this,
Yeah.
I would say, which is either way, if we look at the last 3 to 6 months, the president's not going to stop on this path now. One way or another, he's going to keep going. So if we fast forward to, it's May that Powell's term's up?
Yes.
So fast forward to then either way, are we not basically certain that the Fed is now going to ignore inflation data to the extent that we all used to think it would look at it? Or does he have to do both of these moves? Does he have to get rid of both Lisa Cook and Powell? And the other point to look at it the other way, if we bring up that graphic of the surrogates, as you put it, are all of the current people that you had a red bar underneath total surrogates, like we think the next appointment will be, or not?
I don't think they're all total surrogates. I think Chris Waller for sure will exercise some independence. Stephen Mirren, I don't think he would. I think he would take directions of the president. Nikki Bowman, I don't know either. She's taken some direction, as Leslie Picker will tell us, in terms of aligning her views of regulatory policy with the president.
Yeah.
But whether or not that's unusual or where it should be. Notice that Powell has a red and a blue bar.
Right.
Remember, appointed by Trump and then renominated by Biden. So he's sort of, I guess, in the middle there. It's a good question. I think I have a couple of answers to that. The first is if you look down the road, the market already was priced for a dovish Fed. 3% on the December 2026 Fed funds contract. Look at the 2-year, it's down as well. About 370, 360, whatever where it was. I didn't check this morning. But here's the thing. I think there's also some belief that a Fed official in the driver's seat of monetary policy will only tolerate so much inflation. But I have another answer, which is this. The market not being concerned with the Fed's independence is one of the main reasons why we have Fed independence. Market says, like a dog, give me more food now, and I will eat it all that you put in front of me, and I do not care about inflation next year or the year after that. I care that I have easy monetary policy now. The whole purpose of having independence is to separate the long-term exigencies of making monetary policy with the immediate gratification desired by the political process.
I'm saving that video. We should just put that video out so people can hear it over and over again. But if that's true, all of the arguments of people who've come on our set, and I don't know if you've ever made the argument, but there's a lot of folks who've said the market, if the Fed is not independent, the market will melt down. And I think what you're saying and what we're seeing is the market will not melt down. The market will not
It's really
actually,
interesting.
the market will not be the reactionary function in any way.
It may not be, and it's important in that respect because if you think about the April 2nd reciprocal tariffs, it was clearly the market that forced the the president's hand to backtrack on those reciprocal tariffs. This may not be the case this time, but I would watch the dollar, and then I would watch the knock-on effect of the currency to the bond market, and then I would watch the bond market's knock-on effect to the stock market. Those are the three ways. If the market is going to be concerned about independence, it would be the dollar, the bond market, and then the stock.
But to your point, if it's like just feed me, just give me more, maybe they don't care.
They don't care now, and maybe they won't. Maybe the strength of the American economy and the liquidity of U.S. dollars around the world is such that they are immune to these concerns about Fed independence. But theoretically, most people think it's a critical aspect of our financial system and the global status of the dollar as a reserve currency.
But just high level, Steve, I mean, you've been covering the Fed for a long period of time. Have you ever made a wall that has different Fed officials based on who appointed them? I mean, it's almost like how we talk about the Supreme Court.
Right.
This person was appointed by this president,
Leslie Picker,
therefore they had these
Leslie
certain...
Picker, at the end of the segment here, you came up with the most striking observation of all, in my opinion. As I wrote this segment, and I wrote here these words of who nominated whom, I realized we had really come to this place where the Fed is entirely a political football. In 23 years, I don't think I had ever said so-and-so nominated by such and such.
Yeah.
A single time, be it an Obama, a Bush, or any appointee, I had never, ever distinguished the appointment of a Fed governor by their president, or distinguished it that way. And there has never been a reason. So right now the question becomes: is the Federal Reserve permanently politically marked in a way that it will now be seen in the same way that we see the Supreme Court? We had never seen the Fed that way, and now maybe that's the prism by which we're going to be judging and thinking about the Federal Reserve.
But I had to, your point about what forced him to change tack on tariffs applies in reverse today, which is, look, you can politicize it all you like, it doesn't affect markets. At least in the short term, the 10-year is hardly, look at currencies and bonds. It's European bond markets that are rising today because of the French political situation.
Your next guest is you're gonna say, how do you do this? He's gonna say, buy. You can be like, I don't know, I don't care. I got to make money for my clients. If the market is moving up, I'm buying.
Right.
They're not. You don't give investment advice based on theoretical principles of independence.
Well, and also, so far as we know, she's not actually fired. She's still there. She has vowed to fight this. So perhaps their markets are waiting on some movement on that front. Is she ultimately removed? Do the markets react to that? If she's fighting it, maybe the markets are kind of in wait and see to.
I think I need to in my next report. I need to make a list of things that we have no idea of where we stand on.
We need multiple walls.
We don't know if she's fired, and we don't know. Right? Exactly.
Steve, thank you for helping us out this morning as we're all trying to make sense of a lot of things, and there are a lot of component parts to all of this.
Coming up, what to watch in the markets today and in big tech as we count down to NVIDIA's earnings tomorrow after the bell. As we head to break, though, check out shares of the French CAC index. Stocks in France are falling. The country's three main opposition parties said they would not back a confidence vote called by the prime minister for next month over his budget plans. That puts the government at risk of collapse. Stay tuned. You're watching Squawk Box on CNBC.
Show closes.
Welcome back. New this morning, IBM and AMD announcing a collaboration. They are planning to merge AI accelerators, quantum computers, and high-performance computing to tackle some of the world's most difficult problems. They are collaborating to develop scalable, open-source platforms that leverage that technology. An initial demonstration is planned for later this year. AMD up about 2% this morning.
Well, joining us to discuss the markets more broadly is Sylvia Jablonski, Defiance ETF's Chief Investment Officer. Sylvia, very good morning to you. That topic of quantum computing perhaps isn't the top topic du jour, but why don't we just quickly touch on that because of Leslie's story just there. It's a theme you like?
Yeah, good morning, Wilford. It is a theme that I like, and it's actually been one of the fastest growing plays this year on the market. If you see the AUM growth in both the single name stocks and the quantum ETFs out there, investors have taken notice. So I think that quantum computing is really just a call option on the future of technology and on the future of computing. And it's something that's coming to fruition now, right? So you have quantum computers that are becoming more commercialized. They're starting to make advancements in material science and drug discovery and aerospace and defense. You have government spending going into the space. You have a race in quantum computing between the US, China, and Europe. And the news story that you just announced now between IBM, one of the leaders in quantum computing, and AMD just tells us that there's more CapEx going into this space. So it's a good path for the future of computing.
Spin us back to the story we were talking about at the top of the show with Steve Leisman and the president trying to fire Lisa Cook. Is this a worry for equities or a good thing for equities?
Well, I think Steve Leisman actually put it well that your next guests that are going to come on the show are probably going to stick to their script of invest, right? And so I think that while this is a risk to the market, when you talk about the Fed becoming politicized and some of these outside forces that can impact the market, I think investors will keep an eye on it. So, for example, the way that they'll do that is if anything changes in terms of the Fed's rate cut path. So if we don't get that cut in September, if we don't get the few cuts that the market is expecting, and there's any kind of change in timing or quantity of cuts, I think that pulls the market back. But overall, I think that the market is in line with the idea that the Fed sounded a little bit more dovish at Jackson Hole, that there will be cuts. And so for investors, that tends to be a path, at least in the short term, of looking to the market to invest. And what you saw was kind of that, rip after he came out with the more dovish speech. But, to Steve Leisman's point, there is a macro issue here about, what do we sort of want in terms of balance of powers here? But it's not really impacting the market today.
What's your scorecard on the mega cap tech names' earnings thus far and your expectations for NVIDIA?
So I think what's been great is that this earnings season delivered really, right? S&P earnings were up 10% year over year, NASDAQ up over 30% year over year. And the mega caps were leaders, and there was a good amount of CapEx, particularly in things like AI, and that bodes well for the future of the AI trade. In terms of NVIDIA specifically, that's really the heartbeat of AI and arguably the market, right? So whatever happens with NVIDIA tonight, I think will impact hyperscalers, cybersecurity, AI, chips, data centers, cloud, all aspects of technology. The bar is high, right? We're looking for over 50% in revenues. We're looking for close to 50% in EPS growth. And so it's going to be tough if there's a miss, and you might see, a pullback on that. But I think if they meet expectations, the stock will continue its way onward. And what will be really important is to hear what Jensen Huang says about GPUs, adoption, continued issues between the US and China and tariffs, things like this. But overall, it's just a company that has had more supply than demand, and that's a good spot to be. So long term, I think it'll be a stock that people are still interested in, regardless of what happens today.
Sylvia, how do you square some of these mega themes, whether it's AI or quantum computing or spending on defense, with where valuations stand right now? What advice do you have for investors in terms of just short-term versus long-term as they assess some of these bigger themes?
Yeah, so I think investors have a lot of the mega caps in their portfolios already, right? And I think that it's for long-term investors, it's always good to hold on to those. It's a long game with investing, right? In terms of the new themes, though, I just think that there are new opportunities and new pockets to explore. So, for example, AI-powered infrastructure is a good theme. We were talking about NVIDIA, and while you need, infrastructure companies like NVIDIA, Microsoft, Palantir in the AI space, you also need power. You need like the GE Vernovas, the Camcos, the Vistras, things like this. We're thinking that some of this AI applications will take double-digit power in the next decade. And so you can expand that trade and look to some of those types of names or ETFs in those spaces. And then I think that there's other parts of technology that we don't talk about as much, like modern warfare, for example, right? We have conflicts in the Middle East, we have conflicts in Ukraine. Government spending is I think about 850 billion or so was the last aerospace and defense contract. And so when you think about the new modern warfare, we're talking about drones and satellites, the Kratos, the Jobis, the AeroVironments of the world. And so I think that there are places to, again, take call options on the future of technology, and quantum, AI power, and modern warfare are 3 areas to look at.
Sylvia, thanks so much for joining us. Good to see you.
Thank you. Thank you.
Coming up, President Trump floating government stakes in companies besides Intel. We're talking about more than just one. We're going to get you up to speed about what happens next after the break.
C Plus.
Welcome back to Squawk. We are watching shares of Intel again this morning. Take a look. We're about 24.50. They fell about 1% yesterday. Speaking to reporters, President Trump defended his deal for the U.S. to take a 10% stake in Intel and said he would make similar moves with other companies if he has the opportunity. Meanwhile, Intel warning in a securities filing that the government stake could pose business risks, including potentially harming international sales and impacting the company's ability to get future government grants. In a video posted by the Commerce Department, Intel's CEO, Lip Bhutan, said that his company didn't need the government's funding, but was looking forward to having the U.S. as a shareholder. We're going to have so much more on this topic. At 8 a.m. Eastern Time, we're going to be speaking with Commerce Secretary Howard Lutnick about all of this. We'll talk about sovereign wealth funds, potential Bitcoin reserves, and all the things.
Number one question for me is his understanding that Lisa Cook is out pending appeal, or the other way around.
You've already moved on from Intel.
But someone close to the president on that topic is a fascinating kind of
And someone
insight.
who knows capital market implications.
Does the
of a
president
move like that.
does the president think she's already out, or is it the other way around?
We'll find out.
There's a lot to discuss.
And who's going to decide?
Yeah.
That's at 8.
That's at 8 a.m.
Kevin McCarthy before then as well.
Yeah.
Be there, be square.
Exactly, as Will just mentioned, coming
Oh,
up.
sorry. Stole your read.
That's okay. That's okay. I'm going to say it again because it's just that exciting. We'll talk with former House Speaker Kevin McCarthy, who is, and also, is proficiency with Microsoft Excel no longer important in the age of AI? That story is next. As we head to a break, let's take a look at yesterday's S&P 500 winners.
Is
And
Kevin McCarthy answering that?
Download Dave.
Breaking news from AT&T this morning. The company paying about $23 billion in cash for spectrum licenses from EchoStar. The licenses are in the mid-band, also in the low-band ranges. They cover more than 400 markets in the U.S. and will expand AT&T's 5G network capabilities. It's also going to expand availability of AT&T's fixed wireless home internet service known as AT&T Internet Air. Now, as part of the deal, AT&T and EchoStar are enhancing their long-term wholesale services agreements as well. That will enable EchoStar on the other end to operate as a hybrid mobile network operator under the Boost mobile brand. In their release, AT&T reiterating their full-year guidance as well as previously announced plans to buy back up to $20 billion of its own shares. And we're going to have an opportunity to talk all about this transaction and what it means with the company's CEO, AT&T CEO, John Stankey, who's going to join us in the next hour. That's an exclusive interview. Lots of questions for him about this deal and so many other things, and we'll talk to him in just a little bit.
Looking forward to that conversation as well. Now, for nearly 40 years, spreadsheet mastery has been a rite of passage in a multitude of entry-level jobs, from investment banking to private equity to consulting, and that may be about to change thanks to AI. I welcome this, Leslie.
Yeah, because you were a spreadsheet cruncher.
No, but I wasn't very good at it.
You were an Excel monkey?
I was.
Yeah.
Yeah, I did it for 5 years before I joined CNBC, and I always was way slower. Do you know what? Not just than my colleagues, than my late great older brother. He was a machine on it, and it just always annoyed me.
It's for some people, it literally clicks. When
Yeah.
I started in business school, I literally bought a Excel for Dummies book, read it. Still, I'm terrible at Excel, but just within the last month, here's some good news. There's been a slew of AI product launches that aim to take on Excel or Google Sheets. One of them, called Shortcut.ai, went viral when its Excel agent was unveiled in late July. The technology can build a discounted cash flow model from scratch in minutes. The CEO, Nico Christie, told us that Shortcut is already serving thousands of paying customers at thousands of companies, mostly through individual lower-level employees.
The work that you do tends to be very time consuming and I wouldn't say menial, but repetitive. And what you'd rather be doing is doing what the associates and managers do at these firms, which is mostly reviewing the work that takes more time to do. So now that we can have AI that can actually do 4 hours of work in 20 minutes, it's a no-brainer in terms of ROI and making the switch over.
Christie said that ROI unleashed a battlefield in the race for superhuman Excel agents. Shortcut's parent company, Fundamental Labs, has raked in more than $40 million in funding from Process Ventures, Andreessen Horowitz, and First Spark, to name a few. OpenAI just invested $14 million in something similar called Endex. General Catalyst just seeded another company called Paradigm, and Google and Microsoft have been quickly rolling out AI features to defend their spreadsheet turf. So far, none of the agents, though, are 100% perfect. They still require human oversight, especially in scenarios with legal or regulatory or compliance implications. But the technology is improving by the day, and it's expected to have broad ramifications for Wall Street talent, as well as bottom line efficiencies. And guys, this has all really just exploded in the last month.
It's super exciting and makes your life better and should make other people's lives better in certain ways. Those that actually have to do the job, it will make your life easier.
Well,
but there's those who won't get the job
right,
because there won't be a job to do.
Right. And I mean, I asked Christie about that. I said, is this going to just completely supplant the entry-level workforce in all of these industries? I mean, we're not just talking about investment banking. We're talking about consulting. We're talking about private equity. We're talking about accounting. I mean, he said 2 billion Excel users that are proficient with it, that use it every day for their jobs.
But I have a bigger point, which is this kind of highlights a broader question of, does AI now just arbitrage away kind of all the potential different views on a stock or in the market? I mean, if AI builds the spreadsheet and the model from which then the whole of the sell side base their kind of forecasts, aren't we just kind of all going to converge on the same thing? I mean, maybe we already have that now because the biggest stocks are covered by so many people and you get the consensus forecast, but it's going to happen
but
like
they're
that.
going to give you ranges, right?
Yeah. And I think
it's all going to be a range, and someone's going to have to decide, I'm picking the low end of this range, I'm picking the high end of this range.
But I'll step back from this. I still remember in my early days when you had to build your own model. That was like what you were told, and yet you could have just picked up any one of the 28 sell-side analyst models and used that initially. But what does it actually really come down to? I am going to put in a bigger input on AI sales of this company than most others because I believe in the big themes.
Right.
So again, it's so interesting, like the amount of time and energy that goes into all this, and really does it really make the difference, the underlying model versus getting those big themes right?
Well, I think, yeah, it all comes down to the prompts that you give the AI and tell it to look for certain assumptions and pull this 10K and compare it to this 10K. I mean, you still as a human, you have to instruct it to do what you want it to do.
AI is not, so I tell my kids this all the time. AI is not like a mind reader. The prompt actually does matter. If you have a view, you tell it the view. If you don't have a view, it will come up with its own view. I agree. If nobody has a view, and you just are literally saying to the AI, what do you think? Yes, you will get to that point. If everyone has no agency over themselves whatsoever, we will all come to a median in the middle of some sort, some average. But hopefully you have some agency in your life and you're not just going to listen to whatever the AI gremlins have decided.
So I basically agree with that. I kind of put it a different way though. I think the people who take more agency over the next 5 years and rely on AI less will do better. Because I think it's just going to speed up arbitraging away the consensus.
We'll take a random walk down AI Street, perhaps, and we'll find out the answer.
I also think in human development, and I think this is really relevant for kids, you develop your intelligence much more by reading and thinking yourself. And again, the people growing up that embrace AI less, I think, will just generally grow their intelligence more. So I think there's a counter trade here of embrace AI less, and you might go further.
Well, we'll find out.
I'll take the other side of that coin for now, but anyway.
Coming up, former House Speaker Kevin McCarthy will join us on this morning's big news. President Trump attempting to fire Fed Governor Lisa Cook. Stay tuned, we'll be right back.
Welcome back to Squawk Box. We've got the right man at the table this morning to talk about all the news out there. President Trump saying he's going to be firing Fed Governor Lisa Cook. Says he's fired her already. And the government, of course, taking a stake in Intel. Kevin McCarthy is here, former House Speaker and now Alpha Institute Chairman. It is great to see you as we try to understand what this all means. First of all, just tell me what you think of the firing. And do you believe, as we were talking to Steve Leisman before, that she has been fired, she's officially fired, and now she's going to effectively have to go to court to keep her job, or Trump is going to have to go to court to keep her from going to the job?
I'm not an attorney, so I don't know the official answer, but I think this is going to be a test case. We're going to find out, is there cause? The president has the right with cause to remove her. Maybe there's another ability. She says she's going to stay, so I think it's going to come down to the courts.
But do you imagine that the next time she tries to walk into a Fed building, that
She could have a problem.
there are going to be security folks from instructed by the White House to effectively prevent her from making her way
Well, the
into
law
said
says the
building?
president has the right to remove somebody for cause. So he laid out his cause, and I think the way the law reads is she's removed now, and she's going to have to go to court to reverse that if she got a decision in her direction.
Okay, so then the next question gets to maybe the larger picture about Jay Powell, who this president has been after for quite some time. Do you believe this is just a almost test case, if you will, for whether he could fire Jay Powell?
No, because I think the Supreme Court's made the decision, and in Trump's mind, I believe he's decided, look, and he's actually answered this question too. He's gone in May. Now, does that mean the president waits till May to name his replacement? I don't believe that's the case. I believe the president could, as early as next month or the month after, name who will become chair. They've got to go through the process to get confirmed,
Right.
and they'll be prepared.
Let me ask you a different question.
Sure.
As a Republican,
Yes.
are you troubled in any way by the politics of what's happened here with Cook? That's not to say that Cook has not done something inappropriate or wrong. Steve Leisman and I were talking earlier. You can hold two ideas in your mind. You could say that she's done something wrong and this has been politicized.
Yeah.
Does this look to you like it's a weaponization of the president's role? And I ask because there was lots of times where you came on before and thought that Biden or other politicians, Democrats, were weaponizing the system against folks like Trump or some of your own colleagues.
Well, I think it was weaponized against Trump, and I think the court's decisions just recently show that's the case. But I mean, I think your true question is, are we politicizing the Fed? But there's a big argument. Did Powell make decisions for political purposes at a certain time before an election on moving it? And I think most people believe that to be true. Is this just escalating it to the next level? I don't know. The country's going to sit back and see which way it goes. I don't like the Fed being politicized. I mean, I listened to the talk earlier, which I thought was pretty interesting, that you now say who appointed who within the Fed. Because I really believe when people get on the Fed, regardless of who they're appointed by, they kind of come together and they're looking just at a financial basis. And that's how I want the Fed to play out.
So does it
purely in a financial
would it
decision.
bother you if, for example, you looked at that screen that had the red and the blue under each person, and if either a majority or all of them somehow had red under their name, would that be a problem? And if I told you all of them had blue under their name, would that be a problem
Look,
for you?
I mean, people, I know there's good people on both sides of the aisle, and I think we damage people by saying, because you appointed me, I think I'm just going to follow you. I don't think that's the case. And the argument is you're trying to make, is the president creating this, or do we create this? Why did we start putting states red and blue? So we build this up through our own media that we assume California is a far left state, but there's a lot of Republicans in there. We assume these other states, and I think
isn't the
that's
concept
a mistake
that there's
that
an
America does.
I think the hope is that those people on that screen that are Fed governors today are not loyalists to any political.
I don't think they're loyalists to any side. I think they look from a perspective, and they can have difference of opinion.
Right, but isn't what the president? The president is saying that he wants to put in people who agree with him And some people look at that and say they're loyalists. That's
every
the issue.
president says that, members of Congress and Senate, and when they go to confirm them, they ask them, do you agree with me? When you do the Supreme Court, do you agree with me? And now we're getting to the point where people will say, I can't agree with anything, otherwise I can't get confirmed.
But I think it's fair to say that for many decades, cabinet appointments that go through those hearings in the Senate, Supreme Court appointments that go through those hearings in the Senate, they are people with a political persuasion. Historically, Fed appointments haven't been. They've been people with an economic expertise. And maybe there's too much groupthink in there, and we could go through that argument. But have we now turned a corner where the most qualified people who might have very high-paid jobs in finance or whatever aren't going to even want to be considered for these types of roles? And you're appointing politicians going
I
for
don't believe so. I believe you could talk to a lot of people, they'd love to be on the Fed. I hear from them all the time. You look at the number of people campaigning for chair without campaigning for it, right? That is a major honor to do. And when you get on the Fed, you are pretty independent. I mean, you're not interacting with the House and the Senate. You're making decisions, and people are waiting to hear what's being done. It's still going to be that way. And look, the law says you can remove somebody for cause. I have not heard her come back and argue, I didn't do something wrong.
And that's what we were talking with Steve about, which is,
and I think
if the answer was pretty simple,
yeah,
I think you would have heard the answer already.
And had she done that, I think this would be a different situation.
Right.
Hey, I didn't do something wrong. I didn't realize that I was docu-signing something and someone pre-checked that box.
Okay, let's pivot for a second to the other big topic of the day, of the week, of the month.
What's that?
The stake in Intel. And maybe even more importantly, some of the comments that Kevin Hassett made on this broadcast yesterday, and then the president followed up later.
I missed guys at West Point yesterday, so what did he say yesterday?
He said that the government is planning to take additional stakes. If given the opportunity to take stakes in other U.S. enterprises, that the U.S. government will and would like to do so. We're going to talk to Howard Lutnick about this, in addition to, the sovereign wealth fund that the U.S. that he would like to set up.
Yeah.
And I'm just curious about how you as a Republican feel about this. And I ask because, as we said to Kevin Hassett, since the 1980s, Reagan used to say that the 9 most dangerous words in America were, I'm here from the government and I'm here to help.
Look, and look, in my principle, I fundamentally believe, look, I don't like government owning businesses. I don't think that, I think America is more affected by competition. I think that's why we surpass others. But I think this is the follow-up question you have to ask to Kevin and the others. Intel is different than other companies. We are in a battle about AI and quantum, and chips are fundamental, and you've got China looking and Xi saying he's going to invade by 27. So this is where I put an asterisk to my philosophical belief. But I want government to do something about rare earth, I want them to do something about chips, and I don't want to be beholden to China, okay? Right. It's the whole reason
but then you support the sale of NVIDIA and AMD chips.
But let me finish. This is the whole reason I created the Select Committee on China, which is very bipartisan. Because if you read Graham Allison's Destined for War, okay, 16 times in the history of the world, the #2 power has surpassed the #1. Only 4 times they didn't go to war. If we had learned anything from COVID, we are too dependent on China. They control 90% of the minerals, 95% of the processing, and government came in and partnered with a mine, which normally philosophically I would oppose to, but I support that. So I would put an asterisk at this. If this is about chips, I'm going to say this is the smart move.
Okay, can I ask a separate question then?
Yes.
Are you an advocate of NVIDIA and AMD selling their lower power chips to China and the U.S. taking an additional VIG in exchange for that opportunity?
To me, it's not the question, do we get money for doing it? I don't play into that. The question,
well, do you wish that we didn't put that in the mix? Because that does politicize
the macro approach here is, how are we looking to compete with China? Are we looking to have 2 separate worlds with China, where then we're getting into a Cold War. Okay. Then we're saying China's taking one part and they're making a chip in this part of the world, and Huawei is dominating in this area, and we're going to try to dominate there. I think long term it's better that if we're worried about us being dependent upon them, I'd rather have them dependent upon us.
Okay, play this out with me.
Okay.
How about TikTok?
Yeah.
So here we Congress actually created a rule, a law to outlaw this thing because it was a national security threat.
Yes.
You and so many others came on this television program and said, hair on fire. This thing is an actual threat to the nation, and it's like an imminent, immediate threat to the nation, right? And here we are, how many?
Okay, to be fair, this happened when I had left Congress. But in that law, if you read that law, it also put a provision in there for the president, like we do on tariffs, to have to pause or do something different. And I think from a political basis, 100 million Americans use this. And we dealt with this in a Congress
But
before.
you do see all the inconsistencies here, right? Like you do see that the public looks at this between TikTok on one end, AMD and NVIDIA on the other end.
The golden share.
Give us their.
Okay, now wait a minute, but I think you're taking a small part and you're not threading all the way through. Because on TikTok, the president says he is going to do something. And this is what, in the president's first term, wanted to do with TikTok, but couldn't get all the way. Americans are concerned, everybody is, about our privacy, but more importantly about that data.
Right.
So what I understand the president to do, what he tried to be before, don't let that go to China. So put that into an American thing. But he's also negotiating with China right now. That's why I think the TikTok is still
And
sitting out there.
and it's a chess piece in the larger tariff
But I think if that data then goes to, let's say, Oracle or something and sits inside Texas,
fine,
that solves the problem that people, and that's being consistent.
But there's another problem which triggers all of this, isn't there? Which is the pure policy of containment on China in the broad tech space hasn't worked. So now you have to try and partner with them a little bit.
Well, that's the NVIDIA question.
Yeah, exactly.
But that's the macro. What are we as a country going to decide? How are we competing with China, and we're just going to win the argument because we're going to outcompete them? But there are essential parts that are core to the future, and that's why you have to look differently and not think, oh, he's flip-flopping around. He's looking at critical minerals, and he talked about the magnets. If you go down to the Alliance in Texas, you will see that company, actually American company, they mine in California, but now they're building that magnets. And then you watch the American government had to guarantee them so much so they can survive.
But I want to go back to
China
the sort of initial question. I know they're playing the music. We're going to have to play it a little bit longer here.
Yeah.
The issue of buying other companies, something you don't like. You don't like the U.S. government buying these things. Kevin Hassett said it directly. The president said it directly. He plans to try to buy stakes in other businesses. And what I'm curious about is why we're not hearing from your former colleagues saying that they don't like this. I would imagine they don't like this.
This is a fundamental question in the beginning. And if you look at a core Republican, Republicans don't believe it's efficient to have government owning because the companies are not efficient. And that's proved true all the way around. But we're also looking at a world that is fundamentally changing before our eyes with AI and quantum. And we're watching that China systematically went out, used their government to dump, to have the private sector businesses go out. And so for us to compete, this is a little like during World War II. What did a government have to get involved? By American government in these core industries, critical minerals, processing, we're going to probably have to guarantee something.
So you think
now, the way they're looking at it is, from the taxpayer's point of view, I want a return am I just going to give you money or I'm going to guarantee? They're not outright buying it. They're not going into industries that China doesn't have a situation where they own 95% of it. So that is why I put an asterisk behind my principles that this could be a very smart move, because we just went through this battle with tariffs and China was better prepared in essence for this debate this
What
time.
I don't understand is you said you like competition.
Yes.
Right? Do you think the tariffs are helping that? I talked to the CEO of an automaker last week who said that the entire auto industry in the United States, 10 years from now, will be at a complete disadvantage because it will not be competing against the rest of the world at all. We have created a completely domestic market that, by the way, will not even be able to succeed exporting our vehicles because, frankly, China and everybody else is going to be able to be doing much more extraordinary things than we are, given our cost base and everything else.
So we also, we talked on this set many times about reciprocal, right? So if you watch where the tariffs end up, I also watched, and I just came from Alliance, where a number of foreign companies are rushing to build in America. And I've also watched other places open up, like we talked about this Fiji. Fiji has just now opened up their markets where they hadn't before. Europe, where we had gone 40 or 50 years. So
right, I'm just arguing to you that it's going to be harder to sell American cars into Europe because the Chinese are going to be competing with us there, but our market here is not open at all, and so the
Okay, but this is a long-term question. Do you think you're going? Sometimes you got to break China to open up the markets for people to realize what they're doing. And I think that's the uniqueness about Trump, where he'll shock people, where he'll say, I'm going to do this something that puts a very big margin. Well, they were never going to discuss or open up the markets with him. Now they come back and we get a movement forward. And that's why I think you've got to take a longer term look at what he's doing. I think it's more systematic. I mean, look, on his first trip, he went to Saudi Arabia. And what did that do? It secured the ability that the price of oil was going to drop lower, right? So that takes care of some inflation. But also, it puts a check onto Putin because his whole economy is based on the price of oil. And it's also, he's battling the creeks, the China, Russia, North Korea, and Iran. And then he puts a check into Iran. He is resetting this world in a position where we had gotten too far behind. So yes, my principles is I don't want government playing. But if there is essential places where China has control and dependence, and we have dependency on them, I am saying yes. I think the government is going to have to do some type of investment here because they'll dump on our private sector and they won't survive. And that's not a fair game. And that's when we get into also the tariffs being reciprocal. Right. You've got to measure this out instead of sitting back.
We've gone way over time, but we love talking.
But I love this discussion.
I love this discussion. I love this discussion too. We could do it for a very long time. I want to thank you, Kevin, for coming.
Thank you,
this
guys.
morning. You bet. Just about past 7 a.m., 7:14, or 7:14, 7 o'clock with 14 seconds to go. We're here on the East Coast. You're watching Squawk Box on CNBC. I'm Andrew Ross Sorkin, along with Leslie Picker and Wilfred Frost, in for Joe and Becky this week. Among today's top stories, the one we've all been talking about: President Trump saying he is firing Fed Governor Lisa Cook over alleged issues with her mortgages. Cook firing back, saying she won't resign. We're going to get the latest from Steve Leisman in just a moment. AT&T paying about $23 billion in cash, a big deal on an late August day for Spectrum licenses from EchoStar. Those licenses covering more than 400 markets in the U.S. will expand its 5G network capabilities. Also planning to expand availability of AT&T's fixed wireless home internet service known as AT&T Internet Air. Shares of EchoStar soaring on the back of that news this morning, up 82% no less. And we're going to have an exclusive interview in just a little bit with the company's CEO, AT&T's CEO, John Stankey. That's at 7:45 Eastern Time. And then finally, the durable goods report for July. That's coming up at 8:30 a.m. Eastern Time. The markets may move on the back of that news. Let's show you where things stand right now. A little bit of green just on the NASDAQ there, but the Dow off about 42 points, S&P 500 off about a point and a half.
Breaking news in the last 10 minutes from Eli Lilly on its obesity pill, releasing data from a phase 3 study in adults with obesity and type 2 diabetes. Patients taking the highest dose of the drug lost an average of 22.9 pounds or 10.5% of their body weight. The safety profile was consistent with other GLP-1 drugs, with the most common side effect being mild to moderate gastrointestinal issues. And the highest dose, the dropout rate in the study due to adverse events was 10.6% versus 4.6% with the placebo. Eli Lilly has now all the required data to file for regulatory approval. It's previously said it will file by year end. As you can see, the shares are up about 1.3%. They'd fallen about 10% earlier this month when they had some other data on this, which was less favorable. So we'll get more breakdown of that for you a little bit later. Squawk Box back in a couple of minutes. Welcome back. If you hadn't heard, President Trump says he's firing Fed Governor Lisa Cook over alleged issues with her mortgages. Steve Leisman is back to break all of this down for us. And Steve, for those just tuning in, remind everyone what we're talking about.
Well, it's the firing of Lisa Cook, the Fed governor, but markets are awakening this morning, Wilf, to dramatic and considerable unknowns about the independence of the Fed, the power of the president over the central bank, and of course, all that leads to questions about the outlook for monetary policy. The president saying he fired Cook for, quote, allegedly making false statements on one or more mortgage agreements. In a letter to Cook, he said, quote, the Federal Reserve Act provides that you may be removed at my discretion for cause. I've determined there is sufficient cause to remove you. Cook, in a statement last night, responded, quote, President Trump reported to fire me for cause when no cause exists under the law, and he has no authority to do so. I will not resign. So there are lots of questions about this, many of them asked by the people around this table in this clock hour. Here they are. Is Cook actually fired? We don't know. Does the president have the authority? We don't know. All of this is historic and unprecedented. Will Fed Chair Powell, what will he do in response to all this? Will he make a statement, support Cook or not? How will courts weigh in? When will they weigh in? Does the president now control the Federal Reserve Board? Many, both inside and outside the Fed, have viewed the attacks on Cook as political, part of an effort to strong-arm the Fed into lowering rates, and for the president, by threat and deed, to control the central bank. If the president's removal stands, the Board of Governors would have only 5 of its regular 7 members. Chair Jay Powell, appointed by both Trump and President Biden. Vice Chair Jefferson and Governor Michael Barr, appointed by Biden. And then as Vice Chair for Supervision, Michelle Bowman, and Governor Chris Waller, both appointed by Trump. The president has nominated CEA Chair Stephen Myron to a vacant spot. Replacing Cook would give Trump a majority on the board. Fed probabilities changing only slightly in the wake of the firing. September now at 82% probability of a cut, but there was a slight increase to 42 from 34. That was earlier in the evening before the announcement for a second cut in October. A Trump board majority would open the possibility he could eliminate the 12 district Fed presidents if he so chooses, 5 of whom have voted any one time, effectively giving the president full control of monetary policy through what could be sympathetic surrogates.
My first question, which I feel like we have a little bit more on, hypothetically at least from people like Kevin McCarthy, is what we discussed last hour, which is if she shows up for work today, will she be blocked from entering? Or does Trump have to do more work to affect that?
This president has shown he'll go to great lengths to do things that have never been done before. So he could, I guess.
But the assumption is she is fired.
I'm trying to think of what authority he would, what particular enforcement group he would use for that. Would that be an FBI thing? Would it be?
But this hour versus last night is your assumption that she has been fired and she now.
I don't have an assumption on this. I have no idea.
I think
I have no idea.
As Kevin and we were all talking about, I think the truth is that the way this would happen in practice is she would have to, one of two things will happen. Either she will go to the office and there will be some kind of security or police situation that will prevent her from going to the office, in which case she will then have to sue to step into the office, and this is the bigger one, she will get a paycheck or not get a paycheck. And who is going to decide whether to issue the paycheck or not? Let's assume she gets paid bi-weekly, every other week.
Short term, Jay Powell probably.
Jay Powell would have to be that person, and that's why it becomes interesting on that end. But there's 2 issues here. I think she could be prevented from entering some government facility, right? That would be one way this would work. The other is around the physical action of do you get paid or not?
Does she get a vote?
I'm tempted at this point to side with what Kevin McCarthy said, which is if the president has an order firing her, and that would remain in effect until a court decides something different. I don't think the president makes a decision about firing for cause and that then goes into a vacuum. I don't know. There were some law enforcement officers used when they tried to block a certain individual from getting in. I don't know which law enforcement
apparatus they use for that. I'm just saying that's in practice.
Who does the president dispatch to enforce his own?
But that's how this would happen in the immediate term, assuming the paycheck issue is not tomorrow. Steve Leisman, thank you.
Steve, great stuff. Thanks so much. We're going to ask Howard Lutnick for his views on this at 8 a.m. But we're going to
about Mount Jaro.
Let's talk markets now with Courtney Gibson. She's the CEO of Retirement Solutions at TIAA, where she oversees $894 billion
Blimey.
in assets.
Wow.
I know, it's a lot. So we're glad to have you here. We've obviously been having this debate. We were just having one during the commercial break about, what the situation, the alleged firing of Lisa Cook by the president means for the sanctity of the Fed independence, the market reaction you would expect to see. When the news came out, we saw a dip in the dollar. When she said she would essentially fight these allegations, the dollar came back up. So not much in the way of market movement, market reaction to this. Do you think if we were going to see the market reaction, we would have seen it already, or is there still more to come?
Well, first of all, thank you so much for having me. It's fantastic to be back on CNBC this morning. This is a really interesting conundrum when you think about what's happening with the Fed. And candidly, it's an unprecedented time right now in the market, and we're going to see just how influential the actual Fed and the Fed's movements, actions, and the folks on the Fed actually move the markets. I mean, obviously between 2s and 10s, you're seeing on the short end of the curve, you're seeing kind of those come in a little bit, and you're seeing rates kind of fall, but you're seeing that longer end of the curve telling you there's some risk. And so what is that telling you in the market, even minutely today? And again, this will play out, I think, longer term over time, but what it's showing you is that they are putting a risk premium on the longer end of the curve at this point, and you're seeing spreads widen. That is telling you that the adult in the room, aka the bond market, is actually saying, we will determine what the rates are longer term. The Fed controls the short end of the curve, and we shall see what the Fed actually ultimately does and what the political uncertainty means for the marketplace, both in stocks as well as in bonds.
So if you're concerned about Fed independence, if you're concerned about, the potential trustworthiness of the data coming out, in terms of portfolio allocation, do you just look for different assets that you think will outpace inflation at this juncture, just to make sure that you're covered on that front?
Our markets in the United States are incredibly resilient. And at the end of the day, we do have companies with strong earnings. We have the ability to review their earnings, the 10Ks, the 10Qs. We can look at cash flows. We can look at op margin. We can look at growth. At the end of the day, we have multiple ways, and probably more than ever before, to be able to vet the quality of both stocks and bonds in our market. So when I think about portfolio allocation, and in particularly at TIAA, what we tell our retirement participants is to ensure that you are sticking to the glide path that you have, that you are focused on the outcomes that you want to achieve. So if you want XYZ in retirement, ensure that you are properly allocated, that you are saving enough, and that you have protection in your portfolio. There was actually some really good news coming out of a recent executive order where alternatives were included in the executive order. The little known piece that people aren't as focused on, probably because it's just not as sexy, not as cute, are annuities. And annuities are something that candidly can provide guaranteed protection in a portfolio and the potential opportunity at the end of the day to annuitize and provide a guaranteed paycheck. And that's what Americans want. They want it while they're working, and they want it in retirement. And right now there's just a lot of uncertainty. So where you can take a portion of your portfolio and say, look, this is not going down, I'm guaranteed a minimum, and I have the ability at the end of the day to create a paycheck. You want to be able to do that, and I think that that is a fantastic piece coming out of the most recent executive order that's kind of underplayed right now.
All right, Courtney Gibson, thank you so much for being here.
Thanks
Welcome
so much,
back.
Leslie. Appreciate it.
Coming up, Eli Lilly releasing positive data on its obesity pill, and shares are rising. We're going to talk more after the break about all of it.
Washboardjim.com.
We got some breaking news on the railroad industry, and Becky Quick joins us right now on the Squawk Newsline. Becky, what's going on?
Hey, Andrew. Great to talk to you guys. Look, I've got some incremental news that pushes the story forward a little bit from what we were talking about yesterday. First of all, if you take a look at a 5-day chart of CSX shares, just want to point out what's been happening over the last few days. Yesterday, that stock closed down 5% on a report when I called in to talk about what Warren Buffett told me, that Berkshire Hathaway is not interested in buying a railroad right now. But if you look back a few days, you'll see that that stock was also down more than 3% on Friday. That came on an announcement that BNSF and CSX were partnering up so that they could offer some of the benefits of a transcontinental rail line through cooperation without buying it outright. And there was still some speculation after that Friday announcement, some speculation on Wall Street that maybe this was a precursor to a deal. Buffett made that clear yesterday that no, they're not in the market, at least not right now, to be buying a railroad, not interested in that. They made that very clear. But there's an activist out there at CSX, Ancora. It's been putting some pretty heavy pressure, demanding that CSX pursue talks with BNSF and Canadian Pacific. And there's been some hint that, CSX had not been interested in talking with UNP. Well, what I can tell you today is that CSX never had an opportunity to talk with UNP. UNP did not reach out. Union Pacific did not reach out to CSX until after it already had an exclusive arrangement with Norfolk Southern, because that's been kind of what's been passed around on this idea that CSX was not interested in doing a deal. That's not the case. The issue is you need to have a willing buyer. Union Pacific was already locked up with Norfolk Southern in this exclusive arrangement. Berkshire Hathaway has said that it's not interested. The other railroad that Ancora has been pushing is Canadian Pacific, but that might have a tougher time actually trying to get a deal done with the Trump administration. Part of the reason I wanted to talk to you guys today and point this out is you've got Howard Lutnick, the Commerce Secretary, coming up. Last week on Squawk on the Street, Howard Lutnick addressed this issue. David Faber brought it up to him, addressed this issue of whether the Trump administration would sign off on a merger of a transcontinental railroad. It's a big deal. We haven't seen a joint purchase going all the way back to 1999. You did have Canadian Pacific being able to merge with a very small railroad, Kansas City, in 2023. But before that, you have to go back to 1999 to the joint purchase of Conrail by CSX and Norfolk. And that's because there have been real questions about how few railroads we want in this country. The Trump administration is going to be able to weigh in on this. The National Surface Transportation Board is there at this point. And there's been this idea that maybe this administration would be more open to that. But when Lutnick was on Squawk on the Street last week, he said he was going to stay out of it, that it would make sense for it to be easier to get rail freight across the entire country without having a 2 or 3 day pause in the middle of the country where you had to switch lines. But at the time, he said he didn't think it would matter whether it was going to be cooperation, whether you had these types of partnerships that we've now heard that BNSF and CSX are involved in, or if it would be a merger, but he was going to leave that to the others. But you guys do have him coming up later today, and I thought it'd be interesting to get a little more from him on that point.
Becky, there's so much to discuss with him, and we'll definitely want to add this to this. My other question for you on this broader topic is, has Buffett's interest in the exposure he's got to the sector at the moment diminished, or he's just not interested in full control?
No, I don't think so at all. In fact, when I talked with him yesterday, he pointed out that Berkshire Hathaway and BNSF through Berkshire Hathaway has pretty unlimited resources when it comes to what they can spend to try and make it easier to get things put across the country in a transcontinental railroad. His point was, you can do that through cooperation. You don't need to actually buy each other or merge those two companies to be in a position to do that. And I think that's what all of its CEOs involved have kind of seen on that. Joe Henricks is CEO at CSX, and he sat down with both Warren Buffett and Greg Abel at Berkshire Hathaway, and I think they've had a lot of cooperation. That's what that announcement they put out last Friday was pointing to. They have unlimited funds, Buffett said, if there are deals that make sense, if there are things they want to do with the railroad, and they would be willing to commit that capital to it. So I don't think this is a backing away from it, but I think it's a big question about how much you want to pay for something like this. Remember, CSX shares were up more than 8% since back in July, when Semaphore first reported that UNP was looking for a merger partner back in July. I think that's the point, is that the stock has run up on this anticipation that there was going to be an offer that came, but I think you got to look around to see where those offers are going to come from, because the potential partners, at this point at least, are saying no thanks.
But Becky, if the stock were to drop on the back of the news that there is no offer, let's just say
and it has.
a couple
It's
months
down
go by, and it goes lower, do you think that could
I would never say never.
revive
I think
interest
a much lower price
if there was?
would be a difference. I think a much lower price would be a difference. Remember when Berkshire Hathaway bought Burlington Northern, it was because of the financial crisis. There were huge issues that were taking place, and stocks were much lower at that point. So I think any deal is possible at a certain price, but that price is probably nowhere near where it is now.
Fair enough. Becky, great to talk to you. See you next week.
Okay, thanks guys, appreciate it.
Right, Eli Lilly shares. Let's have a look at those after that news that we just reported that the pharma giant released more data on its obesity pill. Patients with obesity and diabetes lost about 10.5% of their body weight. The data clears the way for Lilly to seek regulatory approval. Shares are at 1.7% when they got some data on this a month or so ago, or just under a month ago. They did fall. Let's get clarity on which bit of the data outweighs the other. Tim Anderson, Bank of America Securities Senior Pharma Analyst, joins us with more on this. First of all, can we just break down, Tim, the drug we're talking about? I'm going to mispronounce orforglipron, there we go. And this is an oral weight loss drug?
Yes, that's right. So the weight loss drugs you hear about the most in the news these days are injectable. This is an oral version of the GLP-1. So it's a pill-based therapy that you would take once a day.
And we clarify the data we got earlier this month versus the data today. What's your interpretation on it?
Yes, so we've had 3 different phase 3 results report out now. The first set of results were in pure diabetics, and that was from the ACHIEVE-1 trial. And that delivered what investors were hoping for in the stock at rally. The second trial that just came out earlier in August was ATTAIN-1, and that was in a pure obese population. And that fell a little short of what investors were looking for, and the stock had gotten hit pretty hard. And then this morning's results from ATTAIN-2 look at patients that have both obesity and diabetes together. And the results look in line, I'd say, with what we were looking for, which is why the stock looks like it's up a little bit pre-market.
So sum it up for us. Is this really good news in total? Will Eli now have the best oral weight loss drugs or not?
So you have one main competitor in the space, which is Novo Nordisk, who'll be launching an oral version of their GLP-1 that's called oral semaglutide. And the products look like they have about a similar level of weight loss. You have a restriction with the Novo Nordisk product in terms of how you take it. You have to take it in the morning. You have to take it on an empty stomach. So that is does a little bit disadvantage it competitively. Lilly's drug, you don't have that food restriction. So with comparable weight loss, with comparable tolerability, things like nausea, and a little bit easier to take, I do think this will probably be the market-leading product, which is also a commonly held view. The workhorse product for Lilly is still likely to be the injectable products that you hear about in the news, Mounjaro and Zepbound.
Tim, why is that? Because you'd think the pill would be it.
Yeah, because a once-a-week shot with a pen device where you don't even see the needle, you don't even feel the needle, and you get better efficacy. And it's already established itself as the brand in the marketplace that I think docs are used to. There is some geographic variation on needle phobia. So outside the US, it's more common to have some fears about taking a needle. So the oral might actually do better ex-US than in the US. But it is just patient preference. And I think commonly folks look at a pill and say, why wouldn't that do better? I think it's time on market with the injectable plus better efficacy is the reason that product may end up being a
But Tim, am I wrong to believe, and we've all talked about this at this table, that I have a view, maybe I'm wrong, that we're all going to be taking some version of this sooner or later, and it would be the pill version that would be the thing, especially for people who might not be diabetic or pre-diabetic, but people who are just trying to maintain weight or lose a little bit of weight. Wouldn't they be more inclined to do this pill situation?
It's patient preference. There's a line of thinking at the moment, which is maybe when you're an obese patient, you initially go on the heavy hitter injectable product to get that maximal weight loss. And then you can actually transition from the injectable to an oral to maintain that weight loss. So those studies haven't yet been done. They're in process now. And it does make sense. I mean, what's your goal when you're trying to lose weight? You're probably trying to lose as much weight as possible. So maybe the paradigm is going to be take that weekly injection first and then switch to an oral. We don't know that that's going to be how it plays out, but that's one very plausible scenario. Now, some patients, like you say, if they've never taken a needle before, maybe they want the oral. Others might want the most efficacious product and are willing to take that needle. So it will, be different things for different patients.
Tim Anderson, thanks so much for joining us.
Thank you.
Coming up, a transport and logistics company that could really be an AI play. The CEO joins us next. And as we head to break, check out the price of Bitcoin this morning. Now below the $111,000 level, about $109,000 level, off about 6% since the start of the month. Squawk Box is coming right back. Welcome back to Squawk Box. We are joined now by Frank Holland and a special guest in the trucking industry. Hey, Frank.
Leslie, thank you very much. The company we're talking about, C.H. Robinson, shares have rallied more than 25% since reporting their earnings back in July. The company is the biggest truck brokerage here in the U.S. with about 12% of the North American market. Several analysts I've spoken with call C.H. Robinson an under-the-radar AI play. They use agentic AI, and they've used that to reduce headcount by double digits over the last 3 years while increasing volumes for freight. Joining me now is Dave Bozeman, C.H. Robinson's CEO. Dave, good morning. Thanks for joining us.
Hey, good morning, Frank. Thanks for having me. Good to see you.
Dave, so much talk about tariffs, rail consolidation, the upcoming holiday season, but we got to start off with AI. How are you doing this? I talked to a lot of analysts. They say that you guys are using AI to reduce headcount. You've reduced headcount by double digits over the last 3 years. At the same time, you've grown freight volumes. A lot of companies would like to be able to do that. Reduce their workforce while grow their revenues. How are you doing it?
Well, first of all, AI is huge for us. And it's a combination of three things, Frank. It's our lean operating model that we put in place in the beginning of 2024, along with what we think is industry-leading technology in our agentic and generative AI technology. And again, the best logisticians in the world. You put those three together, and it's bringing what we think are superior results. But AI itself, it's driving our quote-to-cash process. We're taking out mundane tasks. We've already taken out over 3 million shipping tasks and automated those, fundamentally changing the work. It's produced 35% productivity in the last 2 years, which we're really proud about. But really, Frank, I'm super excited about what's to come next. As you know, this has been on the backdrop of a really tough freight market, 3.5 years, almost going on 4 years of a headline or freight recession. And right now at Robinson, we feel good. AI has been a game changer. But the next step is really agentic AI, and that's why we feel like we're an undervalued AI play in the industrial space.
All right, with that in mind, I think a question a lot of people like to know about your company and others, how does AI help you manage these tariffs that are coming up? Potentially there's going to be tariffs on furniture. The last time we spoke to you, you said a lot of companies are moving their supply chain out of China to countries like Vietnam. Well, that's also where a lot of furniture is sourced. So give us an example. How can AI help some of these furniture makers deal with potential tariffs, reduce their costs, maybe source to other countries?
Well, we're using AI with a number of tools to, we deal with 83,000 customers and 35 million shipments annually. And with these customers, we're able to use these tools to bring visibility, get down to the grain, really drive this kind of hierarchy of supply chain for our customers. And allows them to make really measured decisions on where they're going to move their freight. It might mean starting at a different origin and destination, or it might mean bringing things into a free trade zone. But AI allows us to drive that speed, that visibility, that depth of grain, allowing our customers to navigate what is certainly uncertainty right now with a number of tariffs. And as these deals get done, more certainty will happen, but until those deals get done, we're going to have uncertainty, and we're going to be there to navigate our customers through it.
So, Dave, last question. Speaking of deals, we've seen some rail consolidation with Union Pacific and Norfolk Southern. We also have BNSF and CSX doing cooperation with a cross-country railroad. How does that impact your business? Your main business is truck brokerage. If rail rates are lower and there's more, I guess, less frictionless rail, that would certainly impact demand for trucking. What are your thoughts on that?
Well, Frank, we have a great relationship with all the rails, a significant relationship with all the rails. We look at this as just another relationship. If there were to be a merger, we would be a significant player in that relationship, and we don't see that changing. I do think that this could kind of reshape how the overall market looks and supply chain looks with the rails. But Robinson is going to be a part of it at our scale. We're going to have that relationship with rails because it's one that goes back a long time and it's significant for both of us. So we don't see that as a major impact to our business. We do see it shaping, it could shape the logistics industry if these deals were to go through.
All right, Dave Bozeman, CEO of C.H. Robinson. Great to have you as always. Thank you very much. Andrew.
Thanks, Frank. Good seeing you.
Good to see you.
Thanks, Frank. Fascinating stuff. We got a lot more questions about rail and everything else with Howard Lutnick in just a little bit. Meantime, on the other end of this, we got the CEO of AT&T in just a moment. AT&T announcing a mega deal this morning. $23 billion by wireless spectrum from EchoStar. AT&T CEO John Stankey is going to be our special guest at 7:45 Eastern Time this morning. Do not go anywhere. Mr. Stankey on the other side when we come back.
Calm.
Welcome back to Squawk Box. I'm Dominic Chu with a check on your morning movers. We're going to start with shares of Interactive Brokers higher by roughly about 4% at this point after it was tapped to join the S&P 500 starting on Thursday. It will replace Walgreens, which is being taken private by Sycamore Partners in a deal that's expected to close sometime soon, so keep an eye on Interactive Brokers. Now, with Interactive joining the S&P 500, that opens up a spot in the mid-cap S&P 400. Independent power producer Talon Energy will join the index on Thursday as well. Those shares are up just about 4 1/3% as well. Next up, you got shares of Palantir lower by just roughly 1% following a 1% slide yesterday that came after a filing revealed CEO Alex Karp sold more than 400,000 shares in the company last week. Those shares are still up more than 100% this year, but have been under some pressure as of late, including a 6-day losing streak ended last week where shares fell more than 15%. And we're going to finish with a check on shares of AMD, higher by just about 2 1/4% as they announced a quantum computing collaboration with Big Blue, IBM. Also this morning, analysts at Truist upgraded the chipmaker to a buy from a prior hold. They also raised their target price to $213 from a prior $173. That's a 30% implied upside move from yesterday's closing price. Analysts there are pleased that hyperscalers are increasing their partnerships with AMD. Now, for more on that and other top analyst calls of the day, just head over to cnbc.com/pro, where subscribers can get all the access to detail and analysis behind those big upgrades and downgrades. Andrew, I'll send things back over to you.
Dom, thank you for that. Appreciate it. See you in just a little bit.
Coming up, AT&T striking a mega deal to purchase wireless spectrum from EchoStar. AT&T CEO John Stankey joins us first on CNBC right after this quick break. Squawk Box returns in just a moment.
Got some big breaking news this morning from AT&T. The company paying about $23 billion in cash for spectrum licenses from EchoStar. The licenses in the mid-band and low-band spectrum where they range in terms of coverage more than 400 markets in the U.S. They will expand AT&T's 5G network capabilities. It's also going to expand availability of AT&T's fixed wireless home internet service known as AT&T Internet Air. In the release, AT&T reiterating its full-year guidance as well as previously announced plans to buy back up to $20 billion of its own shares. Joining us right now, talk about all of this, John Stankey, AT&T CEO. John, it's great to see you this morning. Tell us about this transaction and how it transforms AT&T. We're also, by the way, we should mention, for those folks who are shareholders of EchoStar this morning, that stock up about 70% on the back of this news.
Well, good morning, Andrew. It's good to be with you. And look, this is just another step in what we started 5 years ago, which was to assemble the best class of assets in this country for telecommunication services and make sure that we could offer the best connectivity out to our customer base and anybody else. And we've been on a steady march since that time. And I feel like this is the last building block from an asset perspective to really have us in a position to be the best in the industry. And we're really excited about it because it's going to accelerate our growth. It's going to dramatically improve service. It's going to be good for consumers because it's going to take fallow spectrum that hasn't been in service and move it out there pretty quickly. And we think this is a win-win all the way around, not only for our company, but for consumers.
In terms of the spectrum, how much of this is about fixed line wireless versus the more classic mobile phone business?
It's both, Andrew, because first of all, there's certainly opportunities where we will not build fiber, and we know that there are areas that we have customers that want to have consolidated services that are wireless only. And this gives us the flexibility and the opportunity to serve both businesses and consumers no matter where they are in the United States. Where we have fiber, we'll do that as fiber first. This is a great opportunity to seed in places where we're going to build fiber, where we can generate revenues now, and then as we come in behind that with the infrastructure, ultimately roll it over. And then as you start to think about what's next is AI, and it's about really important workloads, in particular aggressive upstream workloads. And the combination of the spectrum that we have here and what we're able to do will not only give us the capacity for downstream data into consumers' handsets and other IoT devices, but it will also allow us to engineer an upstream that's going to be really, really important in the next generation of technology.
John, I don't know if you've briefed regulators about this transaction yet or not, but can you walk through your just analysis of how regulators are going to look at this and the larger sort of competitive landscape right now?
Well, regulators, of course, are going to do their diligence and go through a process like they always do, and I expect that to happen. But of course, anytime we get into a transaction like this, we like to pay attention to those things and spend time to understand what's going on, and in particular with our counterparty under a consent decree associated with the Sprint T-Mobile merger and the startup of their business. It has an extra twist on this, and I know that they've been in active discussions with the Department of Justice associated with that. As I said earlier, I think this is a win all the way around. It gets fallow spectrum into the market. More capacity is good for consumers. It's good for the depth of network. It adds for resiliency in the event that there's an unfortunate circumstance where somebody else in the industry loses a network from a natural disaster or some other kind of activity. It's a fantastic opportunity to see more services put together in the way customers want to buy them together. And as a result of that, I think ultimately regulators are going to look at this and say it's very, very attractive. And as you notice in the announcement, we're going to continue to be an important wholesale provider to EchoStar. We'll be supporting their Boost brand on our network, so they'll continue to be operating in the market as a competitor. They have a very attractive construct around that, and we think all the way around this actually fosters better capacity, better competition, and a better position in the market than where we sit today. And we think there's going to be a good review on that.
John, I wanted to ask your view on the 10% government stake in Intel and the idea of more national champions with government ownership becoming a thing in the years ahead. AT&T, I guess, historically is a bit of a national champion in its own right. Is this something that's a good thing for America? and capitalism and competition in America, or a bad thing?
Well, good morning, Wilfred. Look, first of all, if the government wants to go into the market and buy some of my stock, anybody who wants to buy, that's a good thing. I'm not in the business of necessarily giving it away, but we're not in the same set of circumstances that other companies are in, and I certainly understand if there's an entity that wants to come in and support a balance sheet in some way and the markets aren't going to address that and somebody decides that's the right industrial policy, such as the bailout of the auto industry and what took place around that, and the government decides that because they were able to provide that capital, something could occur that they choose to get something out of it. I kind of get that in that regard. I don't think ultimately over time we want a dynamic where governance is interrupted by government decision making, and hopefully that balance is struck.
But John, let me ask you this. If the government says to you, look, I know you want to do this deal with EchoStar, we're okay with you doing this deal with EchoStar, but we'd like our piece, right? I mean,
Yeah,
we've now seen actually a number of transactions with,
Andrew.
what'd you say?
I wouldn't expect that to happen.
You would not expect that to happen. But is that something that you're concerned about? I mean, and I ask because we've seen a number of transactions even take place where the government has allowed things to happen, but they've decided, well, you know what, we want to do it a little bit differently than we've done it in the past.
Yeah, I wouldn't expect that to happen, Andrew. I think my expectation here is we've heard from this administration, they want good pro-competitive policy, they want investment, they want world-class infrastructure. I think at the end of the day, when the markets do that and can bring that solution back, my sense is the government is perfectly okay with the markets taking care of that problem.
On a separate matter, just because we haven't had an opportunity to talk about it, you sent out a memo that got a lot of attention. I think you know the memo I'm talking about to your employees.
You got a copy of that?
About the culture of AT&T, yes. And I'm just curious what your reaction was to the reaction about it.
Well, first of all, I don't think I drafted it, not expecting that at some point in time it's going to be in the public domain. My approach to my job and how we run the business right now is that we should be in a very transparent environment. And I think that's just a good thing to do as we move forward. The fact that people spent as much time on it for as many days as they did was probably a little bit of a surprise to me. I don't know why that is. I'm not an industrial psychologist nor a psychologist, so maybe I struck a chord in some regards. But most importantly for me, I think the memo was very well understood within the business. There's been the right kind of dialogue around it. I can't say everybody's happy about it, but I think the vast majority of AT&T employees understand the direction we're headed, and that's a really good thing. We're at record levels in terms of them saying they know what our future looks like and what we're doing, and they're committed to bringing this business forward, and that's my first and most important job and what I'm focused on.
Okay. John, I want to thank you for joining us, especially given the breaking news this morning. Congratulations on the deal, and we look forward to following the progress of it.
It's good to be with all of you this morning. Thank you.
Okay. See you soon. Thanks. Coming up on the other side of this, the White House open to more deals like the one struck with Intel. We're going to talk with Commerce Secretary Howard Lutnick about all of that when Squawk Box returns right after this. It is 8 a.m. on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Sorkin along with Leslie Picker and Wilfred Frost in for Joe and Becky this week. On today's top story is the big one. President Trump saying he has fired Fed Governor Lisa Cook, citing allegations she made false statements on mortgage applications. The move following a DOJ probe announced last week. Cook, though, rejecting the firing, saying Trump has no legal authority to remove her. We've got a lot more on this story later this hour. Meantime, the U.S. and South Korea announcing deals including a $150 billion investment pledge and $50 billion in aviation purchases. President Trump meeting with South Korea's leader after last month's trade deal and said both nations will also work to revive U.S. shipbuilding. And Reuters says that Swedish fintech Klarna planning a U.S. IPO next month between $13 and $14 billion valuation. That was below, far below really, the $50 billion valuation that was considered back in 2021. Following the U.S.'s government's 10% stake in Intel, President Trump says that more agreements like this could be ahead.
If you have them as a partner, you have the United States as a partner, I think that would be a very good thing for Intel. And he thought about it a little bit different, and he said, I like that idea very much. We have a deal. And I just made $10 billion or $11 billion for the United States of America. And yeah, there will be other cases. If I have that opportunity again, I would do that.
Our next guest is going to weigh in on the administration's Intel stake, future deals, the U.S.-China chip war, and so much more. Commerce Secretary Howard Lutnick joins us this morning. Mr. Secretary, it's great to see you. We want to talk about Intel. I also want to ask your thoughts, by the way, on the Lisa Cook situation. But let's start with Intel, because I think there's a lot of questions in the business community this morning about what the administration's intention is as it relates to buying stakes in other businesses. We just had John Stankey, the CEO of AT&T, on, for example. He's doing a deal with EchoStar around broadband licenses. By the way, those licenses are U.S. licenses. The government, you could argue, subsidizes those things. And of course, the question that we raised was, what do you think about the possibility that the government's going to come and say, hey, we would like a piece of your company, or to buy one through our sovereign wealth fund, or what have you?
Well, I think the Intel deal was a great example. The Biden administration gave, G-A-V-E, gave Intel, an American company, $11 billion grant in exchange for nothing to help them build semiconductors in America, which would be a really good thing. But why would you have, talk about corporate welfare. So Donald Trump sits in the room with me and Lip-Bu, the CEO of Intel, and says, come on, we've got to make it fair for America. And we agree, we get 10% of the company, which brilliantly equals $11 billion.
Now, Mr. Secretary, I don't want to relitigate the history, but just for context, and I hope you'll agree with what I'm about to say. At the time that the CHIPS Act was put together, and we could critique and criticize the CHIPS Act all you want, the idea was that we were trying to incentivize companies to do something in the U.S. that they thought was relatively uneconomic, meaning they didn't want to do this. And so the idea was, how do you incent them effectively to do that? Most of these companies wouldn't have taken the money necessarily if equity was required on the other end. The world has changed. Obviously, the tariff policy and everything else that's been put in place, and obviously Intel's, frankly, own challenges and troubles put them in a more diminished spot. But in terms of just contextualizing what's happened here, is that a fair way to think about it, or do you think that the original CHIPS Act was just completely mishandled?
I think the latter. The CHIPS Act was mishandled. You've got TSMC, the Taiwan Semiconductor Manufacturing Corporation. It's worth $1 trillion. It's a $1 trillion company with an almost monopoly on making wafers that you break into chips that we all know. And they agreed to build $65 billion plants in America, and the Biden administration gave them $6.5 billion, or 10%. As soon as I took this office, I called C.C. Wei, he's the CEO. We sat down and negotiated, and I said, look, this is ridiculous. I'm going to take back the $6.5 billion. This is just a corporate giveaway. You've got to do better for us. And if you remember, he came to the White House and announced $165 billion of investment. That's what I'm talking about. At least let's make sure Americans get the
why do you
benefit
think
of the
that all
bargain.
these companies
So-
didn't do this prior?
Well, the Biden administration didn't even know how to ask, right? You've got tariffs, and you've got a real businessman, both as the Secretary of Commerce and as the President of the United States, pushing these people. Micron was getting a $2.5 billion grant to build $25 billion. They now upped it to $200 billion. Texas Instruments from $23 billion to $60 billion. I mean, let's get the benefit of the bargain. You've got to push these people. You can't be a pushover. The Biden administration was just a pushover. That's all it was. It was just a giveaway of money, and the Trump administration is just not that.
Howard, it's Wilfred here. Great to speak. Long time no speak. My question on this, following on from what Andrew said, is what is the bar for the government to deserve a stake in a company for free? Because lots of companies are potentially now beneficiaries, domestic U.S. companies, of your tariffs. Is that enough to warrant a 1%, a 2%, a 3% stake for free?
No, and free is a funny way to say it. I mean, it's correct in that the Biden administration had contracted $11 billion out the door, and Donald Trump and the Trump administration turned that into $11 billion of equity. But the money was already out the door. So I think the key is, where is the United States of America adding fundamental value to your business? If we are adding fundamental value to your business, I think it's fair for Donald Trump to think about the American people. I mean, one of those issues was we give hundreds of billions of dollars to universities, hundreds of billions of dollars to universities, and they keep the patents. Don't you think America should get a stake in the patents, that we finance the research, we give the money? I mean, if it was commercial, we surely would get a piece of these patents.
What about
don't you
defense
think it's
companies,
fair
though,
for America?
Secretary? Why shouldn't the U.S. government say, you know what, we use Palantir services, we would like a piece of Palantir. We use Boeing services, we would like a piece of Boeing. There are a lot of businesses that do business with the U.S. government, that benefit by doing business with the U.S. government. Again, I guess the question is, where's the line?
Oh, there's a monstrous discussion about defense. I mean, Lockheed Martin makes 97% of their revenue from the U.S. government. They are basically an arm of the U.S. government. They make exquisite munitions. I mean, amazing things that can knock a missile out of the air when it's coming towards you. But what's the economics of that? I'm going to leave that to my Secretary of Defense and the Deputy Secretary of Defense. These guys are on it and they're thinking about it. But I tell you what, there's a lot of talking that needs to be had about how do we finance our munitions acquisitions. I think a lot of that is talking. And now you have the right people in the jobs and Donald Trump at the head thinking about what is the right way to do it. I tell you, the way it has been done has been a giveaway.
Mr. Secretary, it's Leslie Picker here. As we're kind of thinking about this concept of a U.S. sovereign wealth fund, would the administration commit to having an independent board oversee it? How exactly would these stakes be assessed to prevent politicization?
Well, let's be clear. There's no sovereign wealth fund now. We're not spending the American taxpayers' dollars on anything, right? Biden gave away $11 billion, and Donald Trump took back, right, an equity stake for the money that Biden had given away. We're not starting a sovereign wealth fund. What you're going to see is you're going to see a national and economic security fund built with the Japanese money, the Korean money, and other countries' money. They're going to give us money to build our infrastructure out in America. Those are the deals that Donald Trump made using his tariffs, not using the money from the tariffs, but using the commitment of these countries that fundamentally understand a strong and powerful America is necessary for the world to be successful.
Mr. Secretary, I'm really interested in how you personally would see it if another country did something of this ilk back, because I know how much you don't like non-tariff barriers.
You mean like China does it every day?
Yeah,
you mean
yeah,
China
no,
does it every single day?
That's exactly what I want to ask about, because I totally get that perspective on China, and it's obviously led to so much of the last year's policy towards China and the last decade since President Trump came in. But what about from a UK perspective? You've struck a deal with the UK, and I know we got better terms than some other countries. And I know you're against, for example, the digital sales tax, and there's still discussions going on there, and that's seen as a non-tariff barrier. What if the UK started to take stakes in domestic companies that kind of act as a China-like approach to this? No, but does that count as a non-tariff barrier?
I mean, you're not really thinking about the fact that the UK government nationalized British steel a couple of months ago?
Yeah.
So, I mean, really?
But I'm genuinely asking about that. Do we get punished for that now? Do we deserve to be?
No, you don't get punished for it, because what they did is, what happened is a Chinese company bought British steel, put British steel out of business, and was just importing, subsidized Chinese steel, put the British steel industry out of business. And the British figured out, along with the Trump administration, teaching them that you need steel to be a real country to be able to defend yourself. And the British figured that out. They nationalized British steel. And now, because they nationalized British steel, America can do a deal with Britain on steel, because otherwise we would just be inviting the Chinese in. Imagine British steel was really Chinese steel.
Mr. Secretary, so let's just base case it. So we just put it on the floor here, because I think, as I said, a lot of business leaders and other policy leaders are watching you right now. What types of circumstances would amount to the U.S. government and the administration deciding to take a stake in the business, either for free or buy-in or something else? Just so that everybody understands what we're actually talking about.
Okay, so if a company comes to the United States American government and says, we need your help, we want to change everything, right? NVIDIA goes to President Trump and says, I'd like to sell a new kind of chip to the Chinese. I know it's not allowed. I'd like to do that. Will you work with me to do that? I think that's a question between the CEO and the President of the United States of whether he will listen to them and change the rules. And if he's willing to change the rules and he wants something for the American people, then that sounds like a good idea to me. And there are other times where if the United States of America is completely making your business, or I'll give you the example, we need rare earths, right? We need rare earth magnets to make motors in America. The Chinese had closed that off, and they were threatening us to not deliver that, and were choking us with that. So what happens? The Chinese have a 90+% market share, and they choke this business. You can't be in business because they sell those magnets for half, put you out of business, so they have 100% market share. That business doesn't work unless the United States of America gets behind it. It is time for America to make sure we win in business and we win in foreign policy, and that's what Donald Trump is doing. If you require and need the United States of America, Donald Trump is going to think about it, but he's going to make sure the benefit of the bargain is earned by the American people, not just giveaways all the time.
Mr. Secretary, how concerned are you, though, about competition under these type of circumstances? And maybe more broadly, the idea, maybe you think it was a failed idea, but the idea that the U.S. Exports the idea of free markets, exports the idea of capitalism. We have been quite critical of national champions for years when other countries have pursued them, putting China aside, Europe and others. And we have tried, I think, to be a role model. You may say that being a role model has not succeeded to the extent we want, but I'd like to think, at least on the margins, it's helped. Are we now moving into a new era of what you might describe as a free market capitalist, of what this all even looks like, generationally now?
Well, I don't understand. I don't understand the thinking. I mean, the CHIPS Act gave $50 billion to companies, right? Why don't you think America can sell a car in Japan or in Europe. Why do you think? Because they subsidize the cars. The governments subsidize the car companies and help them. Where do you think your VAT money goes? It's a subsidy for the car companies in the back door. This type of competition has been going on as long as I have been alive, and probably a century before then. America needs to basically make sure we are in the game, we are being treated fairly everywhere in the world. And giving away money versus getting equity for that money, I find it shocking that any of you are thinking about it. We gave them the money for free. Do you think, seriously, do you guys think giving them the money for free is better than when we give them the money, we get equity for it? If they didn't take our money, that would be great. But if they're going to take our $11 billion, shouldn't America get shares?
Mr. Secretary, the truth is, in the short term, you are 100% right. 100% right. It's significantly better economically for the taxpayer to receive something for it. I don't disagree with you at all. The question is what the long-term implications of doing that are, at scale and more broadly on how other countries and other industry thinks about interacting with us in the future. That I think is the fundamental, sort of larger, more philosophical question. But maybe that's a question for another time, because I have a whole bunch of other questions I need to get to with you, Mr. Secretary, including.
I just want to remind you that most countries in this world subsidize their important industries, and we are the least at that. We didn't tariff and protect, and we didn't subsidize. And what happened? We had a $1.2 trillion trade deficit that was exporting our economy to other people. Think about it. Here's one of my favorite statistics. In 1985, we owned $140 billion more assets in the rest of the world net than they owned of us. And today, the rest of the world owns $24 trillion more of America than we own of them. We have exported our money, and they are buying America out from under us. And Donald Trump is here to stop that leakage.
Mr. Secretary, I do need to pivot to a different question around Lisa Cook, governor of the Fed, who has been fired by the president for cause. She says she's not going and that he doesn't have the authority to do such a thing. You're obviously in the administration, close to the president, also understand how the wheels of just the machinery of the government work. Who pays her paycheck, for example? Is that something that has to come directly from the Fed? Is that something that Chair Powell will have to turn off, if you will? Does she have a pass to get into the building as somebody turns on or turns off? And who does that?
So, yeah, I don't know the details of who has her paycheck or not. But the issue is a federal government, a governor of the Federal Reserve, literally signs her name and commits mortgage fraud, right? It's alleged that she's committed mortgage fraud, and she says, I'm not going anywhere. Well, the crook always says, I'm not going anywhere. And why would anybody defend that? The real question should be, did she commit mortgage fraud, yes or no? And if you did commit mortgage fraud, please get out of the federal government, get out of the seat of the governor of the Federal Reserve, and go away. You don't deserve to be there if you've committed mortgage fraud. Right? It's black and white. If you've committed mortgage fraud, you should be a governor of the Federal Reserve.
This is a domino effect. One of the reasons I'm asking you this question about who needs to turn off her badge or turn off her paycheck is if the answer is that ultimately Chair Powell is the one responsible for that and he chooses not to, then the secondary question becomes, does the president try to fire him for cause?
Well, these are all what-if scenarios. The answer is the Department of Justice will go take this on and deal with this. But the fact is, if this woman committed mortgage fraud, she should be respectful to the United States of America, to the Federal Reserve, where she says she cared about them, and she should go off into the sunset and hope to God the police don't follow her, right? Mortgage fraud is a serious crime. We can't have mortgage fraud in America, and you surely can't have it for your leaders. I mean, imagine anyone in the cabinet who did this. You guys would be calling for their head. This woman should go away. if she's committed to mortgage fraud, and those signatures sure as heck look like hers.
Obviously, it remains a big if at this stage. Howard, a broad question. So much of the last 6-9 months since you've been in your position and the president's return to office has seen a question of the establishment gets too worried about things. You announce policies as an initial reaction, and then everything calms down. When you look, and you know markets better than any of us, you look at the reaction in the dollar today and the US bond market, or the non-reaction essentially, at the prospect of greater influence from the government towards the shape of the Fed. Is this an example of that?
Well, I think the market has learned that the Trump administration is doing an excellent job for the United States of America economy, right? Stock market is at their highs virtually every day. Bond market is steady, and it should be lower. We all agree interest rates are lower. I mean, if the Federal Reserve actually cared about the United States of America, they'd understand that they could cut interest rates, cost the United States of American taxpayer less money. Remember, each 1% of interest rate cut is worth $360 billion a year to the American taxpayers over time. If we can have lower interest rates, the Federal Reserve is supposed to deliver us lower interest rates for the good of the American people and the good of American economy. So the economy is doing well. We're running at a 3% growth rate. Everybody had, hair on fire running around, but what's happened? Tariff revenues probably running at $50 billion a month. GDP growth at 3%. Stock markets at highs, steady bond markets. It sounds like the Trump administration in complete control and doing the right thing for America, one step after another, doing the right thing for America.
And Mr. Secretary, we got to go, but I do have one final question. Becky Quick was on the air earlier, and we were talking about trains and potentially a transcontinental train merger. Would the government allow that?
Well, I think what the government wants is a smooth interchange between the East Coast and the West Coast. The way these railroads work is one railroad is east, one railroad is west, and they take 2 or 3 days to take the car from one train to another. We want that to be smooth. I'll leave that to the regulators and to the people who are in charge of those decisions, but we want an interchange, is what it's called, to be smooth. Whether they do that by mergers, alliances, and they work it out, we want smooth intercontinental railroads. Imagine in 2025 talking about trying to make it smooth to take a rail car from the East Coast to the West Coast. But that's where we are. I think we want it to be smooth. How they get there, I'll leave that to the experts.
Okay, Mr. Secretary, I want to thank you for joining us this morning. Always appreciate talking to you about all of these big issues as we're all trying to make sense of them. Thank you.
So to come here on Squawk Box, the CEO of Frontier Airlines on the battle between low-cost airlines and the pursuit to win customers by redefining loyalty programs. Squawk Box back in a couple.
Sorry.
AT&T is paying $23 billion for spectrum licenses from EchoStar, covering 400+ US markets to boost its 5G network. The deal also expands their wholesale agreement, allowing EchoStar to run Boost Mobile as a hybrid network operator. Those stocks this morning moving AT&T up 0.4% and EchoStar up a healthy 71%. How on earth does Joe read that from here? He's got better eyesight than me.
We've also got some news on Eli Lilly. Take a look at the stock this morning. On the back of this news, up about 2.5%. The company releasing phase 3 data on its obesity pill, showing that patients lost an average of 10.5% of body weight. Side effects were mostly mild, and there were some gastrointestinal issues with about 10.6% dropout rate at the highest dose. Now, the results give Lilly all the data needed to seek regulatory approval this year, so we could be getting an obesity pill coming to a drugstore near you. We've all talked about, folks who obviously have to use the needle
And have to refrigerate it.
This may change the whole dynamic. Exactly.
Up next, CEO of Frontier Airlines, Barry Biffle, on some changes to its loyalty offers and an outlook for the low-cost airline in light of struggling Spirit Airlines. And then President Trump ordering the removal of Fed Governor Lisa Cook as the battle against the central bank continues to grow. Former Fed Vice Chair Roger Ferguson joins us to discuss that and much more. We'll be right back.
Flash Plus.
Welcome back. We are just seconds away from durable goods data. Futures at this hour indicated to open lower across the three major indexes, but just slightly for the S&P, down about 5 points. The Dow down about 43 points. Let's get to Rick Santelli with that data. He is standing by at the CME.
Thanks, Leslie. Yes, July preliminary read on durable goods coming in at minus 2.8%. Minus isn't a good thing, but this is definitely smaller than the minus 3.8 to 4% we were expecting. Here's where it gets a bit strange. In the rearview mirror, we have minus 9.4%, the weakest since April of 2020. But the month before that, at 16.5, we had the second highest number ever going back to 1992 when this series began. So we can see imports, exports, tariffs, demand, all of these things have really played havoc on a lot of data points. Now, if we look at transportation, that minus 2.8 turns positive. So we can see what aircraft and transportation did. It turns to 1.1%, a very solid number. That would be the equaling where we were in September of last year. To find a higher number, you're back to June of 23. Now, if you look at capital orders, non-defense, ex-air, proxy for capital spending, comes in at 1.1. Very solid. That would be the best read since May when it was 1.9. Now, if we look at shipments, that's up 0.7. That would be the strongest number of the year, going all the way back to April of 23. If we look at Philadelphia, non-manufacturing, that comes in at minus 17.5, a much bigger negative than we were looking for. How did all this affect the markets? Not very much. 427 before the date and 10, 427 now, that's down 1 basis point. At 1 o'clock Eastern, we started trifecta of supply from the Treasury Department with 69 billion 2-year notes. Back to you, Andrew.
Rick, thank you for that. Steve Leisman is at the table. He's looking at the numbers as we speak as well, and maybe we'll also get into some more Lisa Cook. But what do you got here, Steve?
Just real quick, the new orders, capital goods, ex-aircraft is the number to be watching, and it's back from a decline in the prior month, which is good news. We've had a question, Andrew, as to the extent to which business has been holding back because of the tariff situation. Perhaps maybe there's a little bit of loosening of the reins on CapEx. What I've not had a chance to look at, and I will take one more look, is the extent to which this is driven by AI. And we've been talking for a while here. Is AI sucking up all the capital goods, all the capital investment out there to the detriment of other things? I didn't have time to look at that, but that's something that we want to be asking and had been doing so. So whether or not you have a trade-off of I'm investing AI and not in some of the machinery and stuff. Also, I guess you have to ask a question, the extent to which the president's the tax bill has had a positive impact in countering some of the negative sentiment that happened from tariffs.
Fascinating.
But let's get back to Lisa Cook.
And we want to go back to Lisa Cook because we've been discussing, and we asked Howard Lutnick about it. I don't think we know the full answer, but we were asking about, is Jay Powell effectively in charge of turning off her badge and stopping her paycheck? And if he chooses not to, if in fact he is the responsible party for that, does that become a pretext or otherwise, but a reason for the president to then fire him for cause?
For not implementing the order of the president.
Correct.
It could be. I mean, I've asked the Fed if Lisa Cook is allowed in the building. I'm waiting to hear an answer for that. I've asked the Fed for a comment. I've asked the Fed as to whether or not Jay Powell, the Fed chair, has anything to say about this. I know that Fed Chair Powell believed he did not have the power to fire Cook. That was not in his purview. It does not, the Federal Reserve Act doesn't say anything about the ability of the Fed chair to fire. So I think what needs to happen here is somebody needs to go to court and go to court quickly.
Right.
And have the court say there's an injunction. Now, there was an injunction against an FTC official, right, and against her firing, and she's still not at work. So these are, really uncertain times. And I think the question you raise, Andrew, as to the extent to which this could ricochet back on Fed Chair Powell, he has a private attorney that he has, because, just be clear about this, the Federal Reserve as an entity, I do not believe will be defending Lisa Cook. And if Powell were fired...
Why is that?
It's because it's a personal thing. I think that's always been the case when somebody is fired for cause the agency itself does not defend the individual. It's a private person.
Okay, we're going to get an opportunity to talk to Roger Ferguson a little bit later. Stay.
Yes.
We'll talk to you in just a little bit.
Okay.
In the meantime, want to get straight to Phil LeBeau, who also has some news this morning and a special guest as well. Phil?
Thank you, Andrew. The news is from Frontier Airlines announcing a big expansion. Let's bring in Barry Biffle, CEO of Frontier. Barry, you are going to be adding 20 routes, primarily targeting a lot of the strength, if you will, for Spirit Airlines. With their future in doubt, you're clearly making a play for those customers. Why not just make a play for Spirit? Why not come out and say, you know what, we want to buy you again?
Well, I'm not here to talk about M&A, but I am here to talk about how exciting the news we have of expanding, and we see a clear path with Spirit's adjustments to being the #1 low-fare airline in America. We're already the top airline in half the top 20 metros, and we see a clear path to being #1 over the next year or so with their changes and the things we're doing, not just on the network, but on the frequent flyer side as well.
Barry, if Spirit collapses, how much of their market share do you pick up?
I think that we would pick up the majority. If you look on a nonstop basis, over half of their customers can fly us with the changes we've made this morning on a nonstop basis, and 85% on a connect basis. And we've identified, around another 30 to 40 routes that would get us over 70%. So I think we would likely be the biggest beneficiary. But we're not here to speculate about their situation.
Barry, we're looking at a chart of Frontier right now. Look, it hasn't been a good performance for your stock. And there are more than a few who say, hey, look, Frontier has lost money on a net basis 8 of the last 10 quarters. Does the low-fare business model still work?
Oh, absolutely. I think the low-fare model is great. There's just been too much capacity, Phil. In the United States, we've got too much legacy basic economy. We've got too much low-cost capacity. The Southwest guiding to a loss. JetBlue guiding to a loss. And then there's too much space, too much capacity in ultra-low-cost space. So, look, there's demand for low fares, and we believe we're going to be able to fill that void that people have. But at the end of the day, we need to see a little less capacity in the United States for everybody to be healthy.
Square this for me, Barry. You're talking about the need for less capacity, and yet you guys are going to be adding 20 new routes. Now, I understand 20 in the overall system is not going to break the bank, but some people will hear that and they'll say, well, wait a second, we need less capacity. Shouldn't there be more of a pullback, so to speak?
Well, actually, so total capacity is not going up, right? So we're not increasing total capacity. We're going to reallocating some excess capacity in other places, and we're kind of filling that void for consumers as Spirit kind of adjust their capacity in many places. So yes, total capacity is still going down, but Frontier's share of that capacity is going up.
Hey, quickly, Barry, because we're running up against a break here, what's your sense of the consumer right now? There was a lot of hand-wringing that we would see people pulling back on travel. Look, we've had 4 of the 10 busiest days ever this year. So clearly people are still traveling. What's your sense?
Our sense is that there's a lot of excitement. I think, we're talking about it on your network here about kind of the excitement and so forth. And I think that there's a lot of concern. I think we go back 30 to 60 days. But it feels like there's a lot of optimism. So I think when we get past Labor Day, we're going to find out what the fall has in store. But I think there's a lot of optimism about travel and the economy overall now.
Barry Biffle, the CEO of Frontier Airlines, joining us today from Denver. Barry, thank you very much. Andrew, guys, I'll send it back to you.
Okay, thank you for that, and thank you to Barry as well. Still to come right after this, former Fed Chair, Vice Chair Roger Ferguson is going to be with us. We'll talk about the firing of Lisa Cook, how it may manifest, and what happens next right after this.
com.
Trump Media Group forming a digital asset treasury company focused on buying the crypto tokens of the Kronos ecosystem. Trump Media partnering with Crypto.com to establish the holding company, as well as a newly formed SPAC, which is called Yorkville Acquisition Corp., which will then file to trade under the ticker symbol MCGA on the NASDAQ after the SPAC conversion, or combination, I should say. So a lot of moving pieces there. We'll have to break it all down and unpack that for you at some point.
But up next, we're going to be speaking to former Fed Vice Chair Roger Ferguson about the firing of Lisa Cook. We'll be right back. Welcome back. Well, President Trump making good on his promise to fire Fed Governor Lisa Cook if she didn't resign. According to a letter on his Truth Social addressed to Governor Cook, Trump wrote, "Pursuant to my authority under Article 2 of the Constitution of the United States and the Federal Reserve Act of 1913, as amended, you are hereby removed from your position on the Board of Governors of the Federal Reserve, effective immediately." For more on this unprecedented move, let's bring in Roger Ferguson, former Fed Vice Chair, as well as a CNBC contributor. Steve Leisman's here on set. Roger, there's so many aspects of this to get to, including your sort of personal reaction to it all. But the first simple question, we've been trying to get an answer to this and been debating it all morning. Do you know if she is already fired and will now appeal that decision? Or if it's the other way around, that the president needs to go to court to enforce his wishes?
That's a very good question to which I'm not sure anyone has the answer. I think eventually this will have to go to court. There are a couple of questions. One is, what is it? First, is she guilty of anything? We do not know that yet. There are allegations. I don't think anyone has seen any proof yet that's been made public, and we should all keep that in mind. We're speculating here with a big if. Secondly, there's a question of the president's power to fire a Federal Reserve governor for cause. And what is the definition of for cause? Most people thought for cause is for some misbehavior in office, not an alleged misbehavior as a private citizen. And so I think the question that you're asking, has she been fired, is she fired, et cetera, ultimately only the courts will be able to determine that, and we have to find out, is she guilty of anything? If so, if she was a private citizen. Secondly, what counts for cause to allow the president to remove a sitting Federal Reserve governor? So still some ambiguity, I think.
Certainly is a lot of ambiguity. Is that why the markets are so calm, do you think, Roger?
I think in part the markets are calm because of that. I think there is a distinction in the market's mind between, a governor and, the chairman of the board. And also we've seen this president move back and forth quite a bit on a variety of things, including tariffs. So I think the market is now, sort of conditioned itself to wait for the next shoe to drop and the one after that, and then we'll finally see where this all settles out.
Roger, what do you think the prospect is that if in fact, and we don't know this, and maybe you can speak to like the specifics of how this works, in terms of like your badge or your paycheck that gets paid, is that something that gets authorized or revoked by the Fed chair, meaning Jay Powell has to physically do that, or is that done by somebody else?
Well, at the end of the day, Chair Powell is responsible for the whole system, but I'm not sure he's going to make these kinds of decisions, and I'm not sure anyone should be making any decisions yet based on allegations.
Right, but Roger,
here to a person who's
here's the piece of it here's where it gets complicated. If in fact he is the person who turns on and off your badge and decides whether to pay you or not, it's possible the president turns around and says, I fired her for cause, and if you're not going to enforce that firing, I'm firing you for cause.
But here's the dilemma that we're all confronting. First, does the president have the authority? Is this cause? Has she committed something that would stand up as cause to be dismissed from her constitutional office as an officer of the Federal Reserve or a governor of the Federal Reserve? That's first question. Second question is, does the chairman of the board of governors have to follow those instructions? All of this is very, very ambiguous. When I was the vice chairman of the Fed, the president ordered an evacuation of Washington, D.C. on 9/11. We did not do that at the Federal Reserve because we had taken an oath to the Constitution to uphold and defend the Constitution. It is my judgment that defending the Constitution at that moment required me to be in my office. So we have to be a little careful about this notion that anything the president says has become now immutable and must be followed. All of this will go to court. And then we'll find out first, is Lisa Cook guilty of anything? If she is guilty of something, is that sufficient cause for the president to fire her? Both big questions. If the president says that she is fired and the chairman of the board does not enforce that, is that cause? These are questions that have to be asked. You are asking the right questions, but no answers yet. And I would encourage all of us to not speculate too much.
Roger, I think it's interesting that the details matter a lot here, but we shouldn't spend too much time on the details and lose the bigger picture, which is one about Federal Reserve independence. And I want to read you what our friend Krishna Guha is writing this morning. We think asset markets are not properly priced for what increasingly seems likely to be a rupture in Fed independence and the policy reaction function in 2026. Whether or not Lisa Cook signed mortgage documents that claim two primary homes and all of that other stuff, to me pales in terms of the question for markets, which is the Fed's independence here, has it been attacked already in a meaningful way that could potentially, or maybe already has, put a chill on the decision-making process inside the central bank?
So I think you're right to take us to that bigger question, because that is in fact the question that matters. There's a risk. I think this unprecedented move, and there have been other moves that the president has taken vis-a-vis the Fed. All of them, I think, pile up on the side of, is the Fed's independence now being questioned? And is the Fed therefore able to make decisions consistent with its legislative mandate, which will go long past any one administration? Yeah, and I think that is a very legitimate question. I think our friend Christian Guha puts the right issue on the table for all of us to consider, and we should not be complacent about this matter whatsoever. An independent Fed, as I said to you, I think last week, is central to well-performing bond market, well-performing economy, and we need to respect and protect that independence as best we can.
Now, Roger, I don't know if this is germane at this point, but I wanted you to know that at 8:09 last night, the story I was planning to talk about this morning was one where the Fed chair was deemed to be very dovish or overly dovish by some of his colleagues, and that there was quite a bit of resistance to the idea of a rate cut in September. And I don't know that that is related to these events here now, but how does this change the outlook for rate cuts? And the idea here, which is that if the president gets a majority of the Board of Governors, he can fire, they cannot approve the district presidents for their jobs.
Look, I think there is, as you're pointing out, there are many layers to be unpacked and unpeeled here. Let's take it back to the story you're about to file, or thought you were going to file, which is first and foremost, at the Jackson Hole speech, you and I are both there. Chair Powell, I think, clearly indicated that he was at least open to the possibility of a rate cut in September. He said it may be appropriate. Markets reacted very strongly. There are a number of reasons to be cautious about even that. First, as he admitted, inflation is running above target. Second, there are tariffs upon tariffs coming ahead of us, so there's a possibility of more movements from tariffs. There's a question of how weak is the labor market. He talked in the speech about structural changes versus real weakness, so we don't really know. The unemployment rate has stayed pretty much where one thinks full employment is. As you point out, markets are sanguine. Secretary Lupnick was talking about very high equity markets. And finally, and most importantly, this is a data-dependent Fed, a lot of data left to come. So, to pick up on the story you were about to file, will there be a rate cut in September? The odds are better than 50-50, it seems. Is there the beginning of a campaign of rate cuts? I don't think there's anything that supports that. And then it goes to your point, which is if there are a number of governors that come in, or a lot of political pressure, and the Fed, starts a campaign of rate cutting to meet the president's request, I think that's net negative for the economy, net negative for bond markets, and net negative for credibility.
Right. And then is that the point in time that you see more of a market reaction, or does it, as it works its way potentially through the court system, maybe even all the way up to the Supreme Court, if the court were to ratify this move, what would that say about Fed independence, about the trust in the institution as inflation fighters?
I think there's a risk of erosion on both sides. First, how the legal details work out. We are a country of laws, and so we do want to respect that. But it interacts with the second thing that you're talking about, that we're talking about, which is the obvious, political atmosphere, political pressure, the drumbeat, not for a cut, but cut after cut after cut. Mm-hmm. And I think if the Fed accommodates that second thing, then credibility in the Fed is shaken, mm-hmm. Credibility of the dollar is shaken, and our ability to finance our debt, I think, is weakened, not strengthened.
Roger, thanks so much for joining us. We appreciate it. As always, thanks to Steve as well. By the way, don't miss tomorrow our interview with the New York Fed President John Williams. Squawk Box back in a couple.
SquawkBox.com.
Lots of news breaking on Squawk Box this morning. Eli Lilly's weight loss pill meeting goals in a phase 3 trial. We also had AT&T buying wireless licenses from EchoStar for $23 billion. CEO John Stankey joined us in the last hour and said he believes regulators will approve that deal. EchoStar shares, they are up sharply on that news, up some 70%, maybe more now. Commerce Secretary Howard Lutnick joining us right here on Squawk Box this morning as well. He defended the government's investment in Intel, said more investments in other industries were possible, specifically including defense, making a mention of Lockheed Martin, saying that the U.S. government responsible for 97% of their business. Separately, he said if Fed Governor Lisa Cook committed mortgage fraud, she should leave government. So a lot going on this morning, a lot of questions still unanswered as we're all trying to make sense of what comes next. I want to thank Wilf, I want to thank Leslie. What a 3 hours it has been. Make sure you join us again. We're going to do it again tomorrow. Squawk on the Street begins right now.
Tuesday morning, welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Futures red, mostly steady, as more eyes may be on the dollar today in the long bond. Yield rising to 4.92 as the president moves to fire Fed Governor Cook and her statement that, quote, he has no authority to do so. Our roadmap begins with the president saying he is firing her for allegations of mortgage fraud. Cook says she will not resign.
Plus, AT&T strikes a $23 billion deal to buy spectrum licenses from EchoStar. It's an effort to boost its 5G network, and it sure as heck is boosting the stock of EchoStar.
Yeah.
Commerce Secretary Howard Lutnick was on CNBC this morning saying the Pentagon is, quote, thinking about taking equity stakes in defense contractors. We'll talk about that and the continued fallout, so to speak, from the Intel investment.
Let's begin with the White House ramping up its attacks on the Fed today. The president says he has fired Fed Governor Lisa Cook, effective immediately. In a letter to Cook posted last night on Truth Social, President states there is sufficient cause to remove her because she is, in his words, may have made false statements on one or more mortgage agreements. Cook responded with a statement saying, quote, President Trump purported to fire me for cause when no cause exists under the law, and he has no authority to do so. I will not resign. I will continue to carry out my duties to help the American economy as I've been doing since 2022. A lot of reaction, Jim, on the street about whether she could get an injunction from the D.C. District Court, whether that eventually moves to the Supreme Court.
Well, I think the hard problem here is she hasn't been charged. So until she's charged, I don't know why the president would go now, unless he's really confident she will be charged, and I don't think he knows that. You know, David, I think one of the problems here is that without her being charged, it's really difficult to fire her because you're just basically saying, yeah, listen, she may have committed fraud, I'm firing her. Had she committed fraud, I think that the expectation would be, even if she committed fraud before being appointed, it's very hard to serve the Federal Reserve if you're under indictment. It just is.
Right, but in this case, the president, I guess, is judge and jury?
Well, yeah, I mean, let's take her out of the equation. If you haven't been charged, then how would you ever be considered someone who shouldn't?
We have no idea if in fact she's guilty of this charge. There's no due process.
No charge.
No, there's nothing.
No, there's no due process.
I mean, the charge is being made by the president and by others. There's been a referral, a criminal referral, but we have no idea if it's been undertaken as yet, correct, Carl?
Right,
in terms of the Justice Department deciding to prosecute,
Absolutely, right.
which then she would obviously have the opportunity, I would believe, to defend herself, and then a court might determine, and a judge might determine whether she is in fact guilty.
Right.
Now, typically, by the way, mortgage fraud is litigated when it's large. You know, when you're talking millions and millions of dollars at stake, or who knows, those kinds of things.
Say when you're inflating the value of your assets.
Or sometimes that, or not typically when you are on a form saying that you have two primary residences, which is what is charged.
It's not typical of the Justice Department the way
No, that's my point.
But I do think that we have to go back to what common sense says, which is if you've been indicted for mortgage fraud, you shouldn't serve. But she hasn't been indicted for mortgage fraud, so why should she step down on the possibility that she's being investigated? No, she shouldn't step down. And by the way, this the decision May 22nd, 2025 by the Supreme Court says that there's a carve out,
right,
where he can't just say, listen, you got to resign. there is a sense that the Federal Reserve is independent. Now, all that said, when you come back to the notion of Federal Reserve independence, if you can go after someone who hasn't been charged and just say, listen, you're fired, wing it like that, well, why couldn't you do that to anybody?
You can. You can.
Well, how do you feel? Well, no, I'm not
How do
saying
I feel about it? Listen,
No,
and by the way,
no,
this is
I didn't mean that.
This is going to set up an interesting potential path through the courts, because the Supreme Court has given the president certain powers in terms of firing so-called independent employees that are not necessarily under the purview. That said, they kind of carved out the Federal Reserve in the same.
Well, I think that's because that's the only part of the government that is considered to be independent. That you have, it's protected.
Well, it used to be the Justice Department was considered. That was last year. That's
okay. I think we're splitting hairs here.
That's okay.
He's the president of the United States,
and he wants lower rates.
He does what he wants in order to get it so that the lower rates. He doesn't seem to. I think he went to look at the construction of the Federal Reserve building with Powell. Didn't find anything that he thought merited Justice Department investigation. He's got to go on to the next person, and there'll be. Look. I don't. It's supposed to be secret and private that the Justice Department may indict you. It is not something that they're supposed to leak to the journal.
That's the other part of this, and I'm sure you've read some of these notes this morning, Jim Cowan, that if this were to go forward with a charge, that discovery would likely uncover how her paperwork was uncovered. Did Bill Pulte ask for her files to get pulled? Right. And if so, is that being done at scale? Is it being done selectively, depending on your political backdrop?
Well, I think that Pulte has been a freelancer like he did against FICO. I don't. You don't say anyone's been indicted, going to be indicted, or you don't do that because they may not indict you.
Well, or they might. Certainly in this Justice Department, when the president says it, it often will. I think it's assumed that it will happen.
Well, look, we thought Lip Boutin was a traitor on Friday. We're giving him $10 billion on Monday. I mean, come on.
Well, so what do you say? All she needs to do is come in and have a meeting at the Oval?
Things can change. It's true.
Well, just that you leave on Friday. I know Lip Boutin, and respectful Americans, done a lot of great things. 40 years been here. Doesn't matter. I mean, there was someone who said that he should be fired, and next thing you know, he should be fired. I mean, I'm just saying that there is.
I get it. Let me just. In terms of the larger question here, Fed independence. Steve was talking to Roger Ferguson about it in the closing moments there of Squawk Box. It's clear the president wants control of the Fed, right?
Yes.
Okay. And so what do you think the impact of that will be? Because at some point in the not too distant future, we are going to get a replacement for Fed Chair Powell. Is that replacement going to be perceived as being basically the president's puppet? What about Fed independence, and what will that mean, broadly speaking, Jim, then, for somebody who focuses on stocks like you do in the broader financial markets?
Well, look, I want an independent Fed because historically it's been terrific to have an independent Fed. That's why one of the reasons we're the reserve currency. Look, the Federal Reserve, as is, it has historically been the best. And one of it is because it's independent. It's very difficult to try to get them to do something they shouldn't do. But if you think that you're going to wake up one day and discover that the Justice Department may or may not be indicted, it's highly embarrassing. It's terrible to find out that you might be charged by the Justice Department, but you don't know. But the president's taking swift action, and it's very intimidating. The easiest thing to do is resign, then you can move on and have the rest.
For the markets in general, as the stock market shrugging this off.
Well, it shrugs off everything because the numbers are good.
Shrugs off everything because the numbers
are good.
Yeah.
Well, I mean, look, what do you think? Do you think that the stock market sits back and says, you know what? Lisa Cook might be guilty. I am going to sell Eli Lilly and take advantage.
No, I think the larger question is if we lose the idea of Fed independence. By the way, it's not as though they get everything right. You know that. Nobody knows it better than you. Right. You've been a critic of them, and appropriately so at certain junctures. But is there a longer-term impact of no longer having an independent Fed, of being more similar perhaps to Turkey?
Well, look, there's no longer-term impact for us having a $37 trillion hole. This is nothing. That's hard money. We don't know where the 37 trillion. You know, like, look, your grandkids
First of all,
are gonna like get up in the morning and say, "Oh my
that's our-
God, I live in the Weimar Republic here."
That is our national debt, and all that really matters is that we can service it. But to your point, interest costs now running at $1 trillion a year is not an insignificant.
Which is not a part of the Fed's mandate, despite the administration's complaints about how they're costing us $1 trillion a year.
If there is no Justice Department indictment, this goes on every day. He puts them through social every day. That's going to happen, and then it happens, and then there's going to be people who say, hey, maybe she should resign. She's not effective. But she's going to put up a fight. Most people do not. She's like Harvard, okay? Harvard decides to put up a fight. If you put up a fight, you can't just like wake up one morning and say, you know what, I'm not rolling over. It's expensive to fight. Yeah, a high-powered lawyer. You don't want to fight. It's just too hard. He's the president of the United States. The richest school in the country's fighting.
We think. Yeah, there's some conflicting
they
reports.
Can still roll for 500. I'm just saying that
They can still roll for 500. What? How do we?
I don't know. I gave him a lot of money. I'm like, I'm not so good.
I hear you.
Columbia
Columbia rolled. What? Who else did?
Expository writing class. I think he did
Paul
better.
Weiss rolled.
He did better than I did. By the way, that was Carp. That was Barchet. I don't know what to say to you.
You don't ever know what to say to me, do you?
But I'm just saying that there's 340 million people in this country who would resign because to take on the president of the United States is just too hard.
That's
It's too hard.
what happens when the president is one of the most litigious people ever to live.
You know, it's so much better. Now, I don't want Lisa Cook to do this, but it's so much better for Lisa Cook to say, you know what, I've had it. Right. Just like Jay Powell is supposed to say, I had it. These people are not saying I've had it. They're supposed to say I've had it. They're like actually independent.
Meantime, the market is trying to game out what the next steps might be. For some clues into that, let's get to Eamon Javers with more on the White House and the Fed. Morning, Eamon.
Yeah, good morning, Carl. You guys have been discussing it this morning. We are in uncharted waters here in the balance of power between the president and the Federal Reserve. Now, President Trump, in that termination letter to Fed Governor Lisa Cook posted on social media, cited allegations by Federal Housing Finance Authority Director Bill Pulte that she made false statements on applications for her personal home mortgages. The Department of Justice has said it will investigate Cook because of Pulte's claim. Now, in a statement Monday, Cook said, President Trump purported to fire me for cause when no cause exists under the law and he has no authority to do so. Cook said, I will not resign. And she said, I will continue to carry out my duties to help the American economy as I've been doing since 2022. Now, Cook, who was appointed by former President Joe Biden, has hired attorney Abby Lowell to represent her. And Lowell, in a statement, said President Trump has taken to social media to once again fire by tweet, and once again his reflex to bully is flawed, and his demands lack any proper process, basis, or legal authority. Now, all of this brings up a potential months-long legal challenge in the courts. And a big question for this morning, guys, will the Fed allow Cook to have access to her work devices or to the office itself today? That's a decision for higher-ups at the Fed. Is it the HR department or is it Jay Powell himself who will decide whether Cook can come in the building or access her email this morning? That's pending,
All right, let's make a big deal out of it.
And then the question for Powell, guys, as we tease this out a little bit farther, is if he allows Cook to have access to the building today, does that give President Trump another reason to try to fire Powell, saying, for cause, because you allowed Cook in, I'm going to fire you? That's another thing to watch for as the day unfolds today. So very uncertain territory.
You are in Fed history here. People are bringing up the idea of previous Fed governors, whether it's Kaplan or Rosengren and others, where there were allegations of some improprieties and they stepped down. Is that an appropriate an appropriate allusion to make here in terms of the current state of affairs with Fed Governor Cook?
Well, in this case, the Fed governor hasn't agreed that she did anything wrong, right? And there's been no adjudication of that through any formal process, just an allegation by a Trump administration official. So I think you're more...
It's a big deal.
A similarity with Rebecca Slaughter over at the FTC earlier this year. The president tried to fire her. She fought that decision. It ended...
You can't go after the first black person to take this role. So it's... I knew it would be controversial, but I don't want to listen to your garbage today. I think all them politicians cheat on their real estate. I mean, look how filthy rich they get. It's like guaranteed loans at a low interest rate. Even if I'm married to my daddy. Oh well. Life goes on. Where are we at here on SPY? 631, 642.29. So we're in the we're still in the we moved up. We did hit my support last night. This channel will make a big deal out of it. Okay. Practically an ascending triangle. Hit the 200 EMA, so that's got to break. And we got a triple bottom down here. So 641 to hold for right now. I feel so stupid jumping in that trade after I come in. Just assuming that we were going to bounce out of that long snake. I call that a trading error. So far we're flat in the market. Everything has to be made about race anymore. It used to not be like that. But when you have a redistribution of wealth, I think that's the main reason for it. I don't think like that, but that's why I left the Democrats. I got sick of it, of the race baiting. But, you know, to each his own. There's some things you just can't change. It's like that Black Lives Matter scam. Well, it could be more or less pretty close to an ascending triangle. So that's the channel of support. See what kind of color I can put in here that makes it look attractive. Light gray. That's too... It's hard to pick a color for this. I mean, this is what I did for a living, was pick colors. Let's see what that does. Yeah, that makes it stand out pretty good. Yeah, I like that. I'll just leave it that color for now and see if I get accustomed to it. I like that a lot. What time is it? We got 10 minutes, so I'm gonna go make my tea, and I want to be ready for this morning because it's a pretty world today. Oh, that's a neat little painting. That's something I could paint. Ma. Good morning, all-rounder, Link, Magnificent, Michelle, and Mr. Grinch. Initial reaction to consumer confidence. I'm going to say it's going to be down and up. Or we're down already. It's a tough one. Initial reaction, down. Then up. I hardly ever get these things right. Like, La la. Jimmy, better hurt and get your shit typed in. See. Wish I could have a conversation with Trump. Tell him to get over himself. Let's get this Mark. Shut your mouth about tariffs. I think Democrats are getting more pissed minute by minute. They're going to try to cheat. Let's see how Peppolini looks today. Oh yeah, she's in black. We got 2 black crows today. Yeah, I think she looks very, very professional today. Kind of not showing that much cleavage, but definitely got the V top on. Both of them had the V top on. So let's see if we get 2 black crows that open and then bounce. That's my weather report for today. There's tea. Woke up this morning, it was 61 degrees outside. You look darling today, Miss Peppolini. If you leave, I don't know what I'm going to do. How many Zach Morses is going to follow me? It's such a... There are 2 polls outstanding? What the heck? While Jimmy is on vacation, who should be on voice during the time? Well, I want Jesus. It'd be nice to have a woman on here for a change. I think that is her pronoun. And Funk is a little mysterious. I'd like to see Rob and Funk on here. Can we vet? That'd be a choice. I don't want to. I can't vote in this poll. because it'll break Funk's heart if I don't pick him. Correct? I got to pick Punk. I mean, I'd rather have Rob on here. No, they're all good choices. But I have to do it. Oh, shit. If Funk's sober, I'd take him. If Funk's sober, I'd take him. Woo! The initial reaction to durable goods at 8:30. Up, down, turn around. I already did that one. I guess. Okay, I'll be there in a second. Oh, the market's open. I was distracted. I was going to say up. So we're at resistance. We got to break it. Okay, already. NVIDIA, AMD's up 5%, 6%. Man, can you imagine if I held that yesterday? What would this thing be at? The 170 strike. Jesus. $325. And I got out at 170. So that'd be 110%. So I'm going to say Fibonacci on this one. Let's look at the 5 minute. Oh, we're on the 5 minute. Yeah, let's put the Fibbies on here. It's hard to say on the 5 minute. The 1 minute, I'd take it now. Or maybe hit the 200, but see if we retest that Fibonacci. I mean that. Just triggered my alert right there. Okay, here we go. AMD. 22,000 contracts. We're at the 200 EMA, so 271 for Scout, 5 of them. See if I get stopped out of this thing. We got 3 white soldiers formed on SPX. We got the VWAP and the 200 on the SPY. Actually, probably that was a good spout right there. I did good in AMD yesterday. We'll see if we do it the same here today. So that's set. /ES. On the 1 hour, it's not really a good pattern. It's descending. Whoa. Getting slapped around on AMD so far. Well, they took that down fast. Get a big drink of water before I start drinking his tea. Arr. $225. So at 225 and 271. Today's Tuesday. Dut. Tesla had that real good run yesterday, and we just had 3 black crows with a higher low. Tiva's down again. I'm not much into them. I need 248 for AMD. NVIDIA got earnings tomorrow night. We got a new low on Apple here. I'm even on AMD. Let's get a nice little bounce. It's still up pretty good. So I don't know. Got to break the 9 for it to mount to anything. Could go ahead and get out and wait. Mr. Is that resistance double top this morning? Hymns I'm going to take a look at, but not right yet. Coins that I support, but I don't trust it. PDD had a nice bounce this morning. Right at the bell, before the bell. Okay, 261. You got to break that 200. I don't know if I should say you got to break the 200 or break the 9. Probably respect the 9. Google's down $1.35. AVGO's up $4. No big winners yet on my watch list. Boeing's up almost 3. We got CrowdStrike earnings coming out on it. It's moving up. You got Netflix again. I just don't know why they like Netflix so much. I can't stand TV. I haven't had a TV in my house for 5 years. One minute we're double top. Have a higher resistance, double top on a 1 minute on /ES. Double top on the 2 minute with 3 white soldiers. Higher resistance. SPX is moving. Just hit the 63 new high. Nice little setup there. I like how it's looking so far that on the 1 minute /ES. Oh, did I tell you I got out of AMD? Even. I decided to do it. Just not feeling it this morning. Amazon. Been hovering that support for the last 3 days, 2.5 days. Pot stocks had a good little run here. Not today, but this morning they had one. Oh, Triple M, what are you doing out here? VIX is at 1514. What's this? IWM's got a nice little run going on. Oak. My neck's killing me. Well, here we got a new poll. I can select more than one. It says I can't. Okay, YouTube, you're getting ready to see my pretty face. I got a new haircut. Oh. Such a pretty world today. I got a new haircut. Market changing a little bit here. Tesla. A little pullback here on SPY, so I think this is going to be the test. We kind of broke a triple bottom, then she dipped. She found a triple bottom, another triple bottom here, and bounced up. So we're at a pivot point, which is going to be the 200. And if we can build above the 200, I think we'll come back up here to the top. 10-4. Today's the 26th lotto. The 642s. Let's see when my package gets here today. Ordered another fanny pack. Fans call this classic hit by Tim McGraw the best song ever written. What the heck is that going to be? Live Like You Were Dying? No way. I wouldn't vote for that. Probably because he's dying. That's the only thing I could come up. There it is, what I called it triple bottom. I said we were getting ready to break, and yabba dabba doo. 112 to 136. The 642 strikes. Ha ha! I'm on a roll so far. You understand what I did there? I'm going to explain why I thought it was ready. So we had a triple bottom. Let me write this down first. I'm going to try to explain this as best as I can, and I'm not too well educated. So we had a triple bottom off the 200, and we pulled back. Then we got what you call here is a spinning top doji. Spinning top doji, which shows a little bit of indecisiveness, but still yet it's inside the body of that previous candle. And then we had that big candle right here. So I said, I said, looks like it's getting ready to break, because we're at that point with that big green candle. And it broke out, and then it pulled back. So this is when I called the trade out. I said, I'm going to jump in this trade at 112, and I called out, and I'm in the money strike because they were cheap at 142. And then bam, within almost a minute and 10, 15 seconds, in and out of that trade with a triple top, because I saw the triple top pattern up here at the top. And then you got the triple bottom. So this creates a head. Now we can gain a lot of respect if we stay at the VWAP, or we wait for it to come down and do a second shoulder, which I'd rather, the way it's been going, I think I'd rather be a little patient, but we've had a good sell-off. I'd almost wait for that second shoulder to hit. So I'm going to set an alert right above the 200. And if it comes down and hits that shoulder, and I'm before the bottom of these two candles right here, so it gives me plenty of time. Or we bounce off the VWAP. You go in small, and you set a stop just below the 200. And then if it does dip down there, you can add on. But I'm going to be patient and wait. Do you understand me? Say yes. Magnificent. Someone say yes. Michelle, will you say yes? Angel said yes. That's all I needed. I was afraid to ask Michelle. You don't tell her what to do. See what I tell you. We bounced off the VWAP. And went to 114 to 128. 130. Here, what am I doing? These chips cannot be around my desk. This would be a bad habit. Move them over there. I love Fritos. I love you, Frito. I ever told you that every time I eat, you have the best crunch and the perfect amount of salt in junior size. Slim, about 1.5 inches long. And the color so exquisite, almost as pretty as Orange Man. We have, does anybody see that chart pattern here? We have a megaphone, I'm telling you. This thing could drop if it loses support, and I'm going to say the support will be the 200. And this is the /ES. Now let's look at the 15-minute on this thing. At the 15-minute, we could run up and hit the 200. On /ES. Also, the perfume that you have, potato chip, is outstanding. I'm going to call this resistance. I think I'm more into that than I am the other one. And we got a Head and Shoulders. Jim's waiting for his second trade. Or his third trade. I'm 1 for 1, 1 for 2. Tesla's pulled back to support at the 63. God darn, there goes SPY, 138.7. We're at resistance. Okay. It's now or never. Are you going to break? Boom!
For Magnificent 7, which does see a few of its components, notably NVIDIA.
Let's break. Oh, yeah.
There's a dude down the street with his old washboard. Washboardjim, he got a sneaky snake, goes boom, 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 goes boom, 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 sneaky snake, goes boom, 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 goes boom, 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 sneaky snake.
Boom, boom. Boom, boom. Boom, boom. Boom, boom. A lot of buys coming in. We're looking at a quad top, number 5. Are we going to take a nosedive? 1, 2, 3, 4, 5. Looks very bullish, but I'm not in it yet. If we break, it might pull back and respect number 5. We're looking at the SPY, baby. Oh yeah. We got a resistance level yesterday on the 30-minute on /ES. So let's get fine-tune that real fast. Right around 65.06.67 was support here at the double bottom at 64.68, 69.50. So we want to just bring that alert up a little bit. Oh, first we'll put the price line in. And then we'll set the alert above it. Right around 72. Oh, look at that. That's Tesla missed it by 2 minutes. It's already up $1. Oh yeah. Oh, congratulations to Rob. Is that Rob or an R? Embardo and Michelle. Whoa. Magnificent's going to give you a free trip to Mexico for being the winner, Michelle. Only a virtual one. A boom boom. A boom boom. We're going sideways. Right now it looks still bullish, but we got some wicks here. It's kind of a little scary on the 2 minute, 1 minute. It'd be nice to get a nice little knife here. See all these wicks? These are all inverted hammers. No, you're wrong, James. Boom! Damn! Now they're at 146. So I left $100 on the table. Ba-boom boom. Yes, I eat Fritos in bed. Kind of gets crummy sometimes, but I don't care. It's better than whipped cream. No, yes. Sneaky snake. Are you calling? Okay, we're at the VWAP. Now it's telling me if we're going to break out, it's going to be now. Do you understand? At 117, 116. This is still keeps it bullish. And we got that long leg doji again. Spinning top. So the crowd's going wild here at the sports arena. We're going to know any second. Well, I don't know about that, but we're going to know if it's going to stay bullish or bearish. And if not, we're going to get that right shoulder that I've been asking for. Damn it. There's $100 I just left on the table. I knew it. I should have jumped in it. Could have got 116 and be out at 129, just like that. Within a minute. Same kind of scenario we had down here. See that candle? Same kind of scenario. Dang. That'd have been a good trade. I said we're getting ready to do something, but I didn't do it. Forgive me. Oh, dadgum, now I just now noticed. I had another confirmation. I already drew it out. Now, see, that was stupidity right there. If I'd have saw that, or if I'd have thought, I drew it out. I just forgot. Let me explain. So there's your left shoulder. There's your right shoulder. I was looking for this down here. That would have been a great buy. I had two reasons to take that trade. 3. If this was fully developed, but I don't think it was. So I had 2 good reasons. Inverse head and shoulders off the VWAP. Dadgummit. Now I'm pissed. That'd been $200 in a matter of 4 minutes. 240. Now we're at a double top, and I'd be out of the trade. Shit. Now I had 3 reasons because of the spinning top. So I had VWAP, inverse head and shoulders, and the spinning top doji with a tweezer bottom. I had 4 reasons. Someone said something this morning. This is about politics. I can't remember, but it did kind of clinch my mind because the thing is about voting. Reasons why it's crooked, why our system's crooked. The voting. This guy named out 4 or 5 reasons, and that makes it unreliable. To where it's just the opposite when you're looking at charts. Makes it unreliable, but it makes it a choice that we need change. Same as. So there's 5. He named out 4 or 5 reasons why we need to change our voting system. And there's 4 reasons why I should have took that trade. You only got to concentrate because that was perfect. Got a inverse head and shoulders, the VWAP, spinning top, and the tweezer bottom. You don't hear much talk about it. The spinning top is a single candlestick pattern that indicates market indecision. If it is formed by a small real body and the long upper and lower shadows of wicks of similar length, which gives you the appearance that is a spinning top toy. This shape shows that while prices move significantly up or down during the trading period, they close very close to the opening price. These are spinning tops. Small body. So you had that tweezer bottom. Had almost the same setup right here. Same like you have right here. Tweezer bottom with a spinning top. Then you have them at the top. They can pull back. Well. God darn it. Look at NVIDIA, double topping. Meta got down to, well, double bottom here this morning. I probably would have eyed that one real close. That double bottom for sure. That kind of upsets me. I wish I'd have took that trade now. But you can't let it throw you off. You'll get another setup. Okay. Well, package being processed at the facility, carrier facility. I ordered me a leather one. I like the one that I got right now, but I don't think it's big enough for what I need to carry on the trip, so I'm going to get another one. This one here is waterproof. I'll be able to carry more stuff in there. Put my prescriptions in there, which little I have. My keys. Smooth waterproof zipper. I like that smooth part. What else does it say there? Comfortable fabric, delicate car line. Double zipper slides on the main pocket. Whatever that means. I should be able to put my treats in there. That's the color I got, black. SPY new high, 157. I knew that setup was a good one. IWM new high. SPX hit a resistance. Is the only one on here on the 1 minute. The only one that's hit a resistance right now, the SPX. So if that breaks out, we're going to go much higher. We got a double top here on the SPY. I hate to use that candle right there, but I'm going to use this one here because it meets up with that other one. So we're at a resistance right now on the SPY also to break. So let's watch this, see what happens. QQQ new high. think we're at a resistance here. I'll set my alert at 6, the old resistance. Dadgummit. 116 to 160. That would have been a nice trade. AMD's now at 256. My add-on technique would have worked with that one for sure if I didn't get out of it. Yeah. I said, baby, you want to have a Frito pie with Bobo? I want you to hear this real close. Tell me what woman wouldn't want to hear this in the middle of the night. Even little belch. Woo! Okay, let's try this again. We're at the 200 on Apple. Okay. Thank you, Aringa. And thanks for the compliment about the haircut. Boom, boom. I'm waiting for my support. You know, this is something that I've been really trying to implement in my strategy here lately, and Funk mentioned it yesterday. And I've told everybody for day one, I kept telling people, wait for your personal setup. Wait for your setup. If you can't read the candles like I can, wait for your setup. If it's only 1 or 2 trades a day, it could really pay off. So I'm waiting for this to hit the old resistance. And then I might not even take it because I got the VWAP. Now I'm seeing set up here. We got 3 black crows and then a hammer. But that body is lower than that one, and that makes it a little bit more riskier. So I want to wait till I get down here and respect the previous resistance, which took a long time to break, and we just hit it almost. I thought we did. So let's see how much these things are. They're still a little expensive. Oh gosh, there's 255,000 strikes at 643. $255K. And now we're in the money. It can't make up its mind, so I'm liking this setup. You know, I just barely missed my alert, and that's, you can't, I mean, that's not precise. So I was off a few cents on that one there. 3 cents, 2 cents. I shouldn't have relied so much on that alert. $643s. We just thought I just heard it trigger. Might have a salad cucumber salad with carrot. I have a lot of my stuff that or have soup for lunch again. Dadgum, there we go again. 70 cents to 79, 78. Tesla's still hovering around that 200 EMA. Oh, 68. Triggered. Yeah, there it is. Right there. I'm going to take a risky trade here. Now I'm back to the right shoulder. This is the third hit. So let's see what happens. The 643s at 60 cents. Kind of risky, I think. Just got to stay here to stay bullish. There's the VWAP. Well, piddly sticks. So I got another reason now to add on if I wanted to. But then we could easily come down and hit that 200 if we don't hold the VWAP. So that's a major support right now. I could have got 53 cents. Right now we're squeezing. Today I'll be eating chicken barley soup with Fritos. Not Fritos, but what do you call corn chips? The originals. Always save. Best choice. Well, if this thing don't work, I'm going to get out of it. Yeah, gents get them at 53. Boom, 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 boom. They even cleaned the hairs out of my ears. That'd have been a good deal there if I'd added 53 cents. We're now at 66. Uh-oh. Did you see right after that third soldier what happened? Dang it, look at that. Head and shoulders. Could get out of it here. Okay. Dadgummit. Left shoulder, head, right shoulder. A boom boom. A boom boom. Sneaky snake. I think it's getting ready to come back down hard. There's no conviction in the market right here. And it gets wore out after time. Time after time. Back to the VWAP again. Let's go through the watch list, and I'll put this on watch just in case. Cracker Barrel had a breakout today a little bit. President Trump posts on Truth Social, Cracker Barrel should go back to the old logo. Admit a mistake based on customer response. The ultimate poll. Much better than magnificence. They manage the company better than ever before. And I agree. She turned it into politics. Who brings politics to the dinner table? The chick is a fool. If she'd left the man with a barrel on her and done some remodeling, maybe it would have been better. See, I remodeled a business once. Did 2 of them. And both of them I bought from the previous owner. But you got to put your own personality in there as an owner. And I had a name change also, but not on the first business. I kept it the way it was. But I added a little decor. I put a big old fat fish aquarium in my picture. Oh, here we go on, dang, right when I mentioned it. Cracker Barrel.
After market calibration of the company and its logo, and you probably know what I'm talking about. Yes, moving averages and being in the now. And one of the ingredients for this strategy to work is being in the now. Well, there's one that's popped up in the news here lately of recalibration of the company and its logo, and you probably know what I'm talking about. Yes, Cracker Barrel. So back in July of 2023, they hired new CEO Julie Fels-Massanio as the company's new president and chief officer. And ever since then, this stock has dropped. And it's dropped because of other reasons, COVID, and then we had that high recession or high inflation under the Biden administration where people were just not going out and eating. So that was a little bit of the catalyst to bring it down before she got hired. And then they said we had a roaring economy during the Biden regime, and they hired this lady to take over and run the business. Well, if anybody knows anything about her, she's a big liberal, huge liberal. And most of Wall Street is. Most of the CEOs are. 95% of them are liberals. And they got into this thing about wokeism. So this became a woke stock. And it was a conservative company. Kind of. I mean, the guy that founded it was from the South and Southern hospitality and Southern food. And I've ate there a few times, but I haven't made a habit of it because it's kind of out of my city limits. But I think if it was around, I might have went in there and ate a few more times than what I did. But she's definitely a woke CEO, and destroys a legendary brand, gets mocked. So she brought racism into this here switchover. And, you know, sometimes when companies don't have a new makeover, or they, because times change and politics sure have changed, and so has America, you got to open up your brand a little bit. But the way you go about it is two different ways, you know. You don't want to go the way she did it, public and bad-mouthing Mega and most of her clientele, and trying to bring in a new clientele, and just restructuring the name, you know, bad with an old man sitting there by a barrel. So she got rid of that slogan and put up a new slogan. And I just wanted to bring our attention to, we're at a major support level, and we still are bearish, as long as you can tell that. This is the weekly time frame. And, you know, I have mixed messages about these woke stocks. I usually like to wait for the bottom and then scalp them, day trade them, but not swing trade them. But here lately, it's been in the news, and, you know, bad-mouthing the brand and coming up with a whole new slogan just like overnight doesn't work very well in any kind of business. So we definitely had a pullback. When she took office, when she took over, it was out around $100. Now it's cut more than 60%. Had it bounce back up here lately, and then the news came out to where it kind of had a little pullback. Well, I'm going to kind of show you a couple patterns in here. This is the weekly time frame. I'm iffy about it. I mean, if it presents a good opportunity, I might trade it. Like if we get another little pullback here right around $50, double bottom off that wick, I might jump in it on the weekly and just kind of swing it for a couple of days to the upside. And I'm going to show you a couple chart patterns here that would help you out trading in the long run.
65.
So this is the weekly time frame. Each one of these can.
I'm at 65 on my 8. Oh, that's AMD. No, it ain't SPY. 67, so.
Candles represent a week.
68.
And these are my moving averages. Right now,
70.
Bouncing off the 50.
Right now, I'm up $100 on my SPY. We'll get back to this in a second. Okay, I'm gonna cut the rope. $0.72, 73. Thank you, George. Thank you, George. Out at 72. Now, if I'd have bought another 10 of them at 53 cents, I'd have made a killing on that trade. I made 120.
SMA, and we've got the 60, and the rest of these are all 60, all EMAs. We have the 63, the 21, and the 9. And then up on top, we have resistance, which is the 200 EMA and the 200 SMA on the weekly time frame. These time frames move around in different time frames that you're looking at them. So on the weekly and the yearly, daily, we have what you call an inverse head and shoulders. And we came down and almost hit that inverse head and shoulders. If I adjusted this up just a little bit, I bet you we did hit that, but I got this set on the daily right now. But I think we probably hit that head and shoulders. This is your head, this is your left shoulder, and this is your right shoulder. Now, once they break out of that shoulder pattern, they like to come back and touch that shoulder again. And then that news came out, and a little bit of
stigma kind of got into this here trade here, and it's pulled back. So we could have an opportunity for day trade this coming week, or even a scalp. Again, I'm going to mention that Wall Street, the fat cats are 95% liberals, progressive liberals, to where, they've kind of thinned that out a lot. But I'm a retail trader, so I kind of trade like they do in a way. I think how they're thinking, then I go off whatever they're saying, usually the opposite. So they might come out and start pumping this stock and say it's a strong buy. The fat cats, the ones that put out the alerts on the news, and we'll pull up that news right here. Why Cracker Barrel stock dropped. Was it a buy the dip moment? Was it a buy or wasn't it? Cracker Barrel CMO defends rebrand after market tumbles. Now they're blaming it on the market. Cracker Barrel Old Country Store shares slightly recover. Cracker Barrel rebound blunder. Americans read, whatever that is. What's next to the dining chain? So, 50-50 thing in the news. Let's go to Wahoo Finance and see what they got to say about it. Cracker Barrel loses almost $100 million in value. This was 15 hours ago. The new logo release. They're racist. They were racist. And I never thought they were racist until they were told that they were racist. I got hit with a biscuit in there one time. Guy threw a biscuit across the room and hit me in the head, and I thought this was a fun place to eat at. Why Cracker Barrel stock drop wasn't a buy the dip moment? The week in business, airlines get sued, Cracker Barrel gets a glow up. Some of these headlines I just don't understand. Rebrand the U.S. culture fixture, Cracker Barrel sparks backlash. Cracker Barrel stock dips after rebranding backlash. So it's just like news, I don't know if it's that important or not. Cracker Barrel's first rebrand in 50 years backfires. I kind of think it does. You just don't do something like that overnight and then call your company a racist if you work for them. So they're going to try to hire minorities and stuff like that, pick people's color, skin, and gender, and who knows, they might throw a tranny in there every once in a while. But I think that's kind of racist. I always like to hire on merit. I don't care what color your skin is, as long as you want to work hard, you got the job. Cracker Barrel stock tanks after unveiling a controversial logo. This could just be a buy opportunity, in my opinion. Might want to give it a couple days to see how it goes this week. If we get a nice little dip, we're at a position now where I think any kind of pullback would be a good day trade or a scalp. And then when the news, the upgrades start to come out, then you want to go ahead and start going on a swing trade for about a week or so. Backlash, backlash, backlash. So that's what we got in the news. So this is the weekly time frame, and we're bounced up here off the that's the 50 SMA, and then we got this head and shoulders on the daily. And we also got a head and shoulders where we stopped at right up here. This is called inverse. This is called head and shoulders. And we're going to go ahead and put a trend line on there. And I use the bodies of the candle. Run it up to the body of the candle, because that way I know I can get in and out of a trade before, because a lot of people like to take it to the wicks. Sometimes they don't get to that wick, but it might sure get to that body. And that body resistance is right around 63.04. So we're going to put a price line, and we're going to call that a hard resistance right there, right around $63. And then the support level will definitely be down here right around a little under 50. We're going to just put it right at $50. So if we come in Monday or Tuesday and this thing pulls back and hits that 50 SMA or even the $50, we're going to find a buy signal on it. Now I'm going to take this to the daily. Like I said, I'm not going to trade this biasly. I like to trade these woke stocks.
when they pulled back real hard. And now here on the daily, we still got that wick right off that there $50 mark, a little bit above it. And then we've got the 200 SMA now for a solid support on the daily. And we got the EMA right here where we had that hammer. So this is an inverted hammer. We could pull back and hit that support level there at right around 53 bucks. I doubt if I can get that in there, so I'm just going to go ahead and put that price line right there. And I'm going to set an alert right above that $53. And I'm going to type in here 200 SMA on the daily. Then I'm going to go ahead and put at or below. And there's my alert set. So when we hit that $50, or even if we hit 53.24, I might be able to get in this trade. And then we've got resistance to break. Right now we closed at 54.40. So the resistance would be right above that 200 EMA, right around $55. And I'm going to set an alert at that 200 EMA.
We hit that.
Call it resistance to break. On the daily. Whoop. I want to change that.
This is where I screwed up. I should have just left it alone. Hurry up, you idiot.
And then on the daily, create an alert. I'll move this up to 55. Change that to at or above. Type in the 200 EMA. Daily. Okay, I got them set pretty good. So we've got that resistance to break, and if that goes ahead and break, we could probably run this up to the 63.
Right now it's at 57.
And we're going to go ahead and just put an alert right here at right around $58, a little under $58 on the 9 EMA on the daily for this coming week.
So it came close to hitting
set that alert.
my resistance. SPY just keeps going up and down.
Nine EMA. Resistance on the daily. So when these alerts pop up, I'll know exactly what we're looking at. Then I'm going to take this to the 1 hour time frame and see if I see anything on the 1 hour. Easily can come back and hit this right shoulder one more time. This first one right here.
We did that.
This up. Well, actually, I'll put another alert right there. We call this a double bottom.
So I hit 2 alerts.
on the 1 hour. That should more or less do it for us. And we'll know when we get into this trade and look at it Monday. And if we break this resistance right here, this will be a double top. And it kind of has a yin-yang effect to it right now. So we're going to go ahead and put a price line right there. And I'm going to change this color here. And that's going to be our pivot point.
There's the color, 56.
I'll make this blue.
56.47.
And I'll know that that's a major resistance to break, and that'll be a double top.
Dadgummit.
And I'll look at the 1 hour, and that runs right into the 63. So basically, we're going to see if this thing pulls back and settles at the double bottom. And if that doesn't happen, this 52.06, and then a strong buy at $50. A little bit above it maybe, but that's going to be my support levels. And then the resistance levels to break is going to be that $55 to 58, 57 something, and this then 63. And then maybe if it gets hot and we get into a good run on this thing, it could run about $4 and hit that 200 EMA right here. And I'm going to put a price line right across that. And that's going to be our hard resistance. Right around 50. 59, 50, 58, 87. So I'd keep a good eye on this coming week. See if this news kind of settles now. It's been a couple of days since she came out and opened up her chops. And I personally don't really care for her that much. But she gets $6 million a year to lose $100 million in a company. And then spend an ungodly amount of money to try to rebrand it. Which I don't see nothing wrong with rebranding. I have my own business. I didn't go in there overnight and say, evil things about the company. Because to me, they had a pretty good clientele. I think I'd have kept my mouth shut and maybe done a few things and made some changes. But I wouldn't have rebranded it like she did. But who knows? It might work out for her, and then it might not. We've seen what happened to Bud Light. We've seen what happened to Disney. We've seen what happened to Nike. They're still failing companies.
Don't forget
They're not doing
Starbucks.
very well. Now, Budweiser, Fat Cat's got all thrown into that one, but it had a pretty good crash also, and it rebounded some. But Disney has a lot of issues. Nike, I can go with a couple of these big fat companies that haven't done very well at all. Actually, I'll never drink a Bud Light in my life ever again. And I didn't drink it anyway. I made my own beer. And the same way the Cracker Barrel and all these places that you go out and eat. And when I go out and eat now, I'm eating at real nice joints. I want to make sure, that the food is healthy. And I've changed my diet quite a bit here in the last couple of years. I eat a lot healthier now, and that might be another reason why some of these restaurants ain't doing too well. So let's go ahead and just keep a good eye on this company. Again, this is a sneaky snake trading strategy where I talk about chart patterns,
moving averages, and being in the now.
Who knows, like I said, I'm gonna be neutral. And when I start seeing the headlines come out and I see a few upgrades, I think that's when
the headline was Trump. Let's see what this thing's got here yet. They're shipping it out. Usually they give me some kind of time frame. Nope. Not yet. Supposed to get it today. I better get it today. They're going to hear from me. Oh, look at here. We're at a support level. We just missed that 200. We just hit it again. Let's see where we are here. Oh, la 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 la. God darn, what happened to AMD? AMD's back at $2. Ooh. SPY's at 47. So we're going to move this up to 642 at $1.02. Anybody see that? I moved it up in the money off the 200. 200 SMA, and we're at 112 right now. I can get out of the stock if I wanted to. There's the 200 right there. That's a double touch. So there's 112. You get out of it now if you wanted to, if you caught that off the 200. I'm just getting that time. There's 112, right to 113. Okay, bingo. Woo! I don't know how he does it, but he does it. He does it fast. We're at 117 right now. Thank you very much. $1.17 all out. Anybody take that trade? I mean, it was too fast probably for you. Unless you know how to read these. Been calling the 200, so we hit the 200 here on the left, and we hit it again on the right. And that's a head and shoulders off the 200 SMA. And run it up and hit the 63 and got out of the trade. On the 1 minute. And then run it up and hit the 63 and get out of it. And that was that hard resistance. Now we're right back down there again. But I gotta go take a pee and get my... Nancy, get out of the bathroom. So we had a fallen wedge here, and we just now went below it, and we hit that old snake. We've been hovering above that snake. She finally got out of the bathroom. I'll be back. I've never seen a chick spend so much time in the bathroom. She's butt uglier than a handshake. I don't know what she does in there. gosh. I might have to walk around the building. I'll be doing a lot of walking on my vacation, just because I want to. Got to find me a chick to walk around with. I have a lot more fun at smaller resorts than I do big ones. I get to know everybody. Okay, what was I going to do? A boom, boom, boom. Oh, just chicks on.
Seasonality, but small businesses, their losses were up slightly, which could be concerning for the macro picture, but the consumer improved. And we have to remember that American Express has best-in-class credit quality, so any premium valuations that are there could be justified with this uncertain macro backdrop that we are as we continue to get more clarity, but it fits exactly what I'm looking for in my screen.
All right, Rick, what do you notice about this chart when you take a look at the trends?
Well, you know, those make some attractive prospects for an investment here.
AXP.
Here. But I'm just looking at the chart perspective here. From that angle, it also is
we got a lot of room to run.
For a bullish breakout here, because what we have is a notable resistance point here. These old highs near 326 at our red line. We did make a new closing high beyond that level about a month or two ago. But
the thing I see with the SPX is if we do break resistance, we got a couple reasons why it might just not. If we break the resistance, we'll break it and pull back. But you got, here's the SPX. I'm going to teach you something. Take the body of that. Run it up there. So we've got three reasons why we're at a hard resistance. We got a head and shoulders. We come up and we tap the shoulder. We got the two moving averages, which are hard resistance levels. And we're at the 63. And we have the orb. So we have a bunch of walls, real solid walls to break. If we break them, we easily break the double top. Or we hit it and just come back and retest and then start to move up. But I'm not, you know, that's like a fat cat. I'm going to go hit my lunch and go to the bathroom.
$300 based on several of our indicators here.
All right, Jessica, let's take a look at your next stock on your list. There is another theme here. You've got a couple of financials in focus here. You've got Goldman on your list as well today. Now, this one has been an outperformer compared to the S&P 500 year to date. What's your thesis on this now?
Yeah, so I think there's a lot of headwinds that are going to be in play with Goldman Sachs. One, any EPS revisions or ROE expansions should follow through with a rebound in. We are waiting on this M&A activity, and we're seeing the IPO market already start to heat up, and Goldman Sachs is a beneficiary of that. So there's also a focus on capital markets and the ultra to high net worth asset and wealth management, which I think strengthens the long-term story for Goldman Sachs. As far as where it fits in my screen, again, I'm looking for high quality dividend securities that offer growth potential. So they're increasing their dividend yield about 9.5% year over year. That annual dividend yield is about 2.2%. Their annual dividend rate's about $16, but their cash flow per share is $52.13. So you can see how that can be adequately covered by the cash, and the payout ratio is about 26 and a little under 26.5%, which tells me that there is room for reinvestment into earnings. So this is still a growth security, but it offers me a dividend that is covered by the fundamentals that I just laid out.
Okay, all right, Rick, you're up. What do you notice about the chart when it comes to GS?
A strong push to the upside since we did hit those lows, as so many other stocks did during the tariff news announcement shock here. That came in at 439.38. After things shook out a bit, price reestablished itself above that purple 250 two-day exponential moving average, which had previously been supportive multiple times. Now price has mostly hung on above our yellow 21-day EMA, so we've mostly been above our faster moving average. You can see several times we pushed above that area here. We did start to make a few tests to the downside recently, but we are still above that short-term metric that many traders use to gauge potential support. So we can see now we are in a situation where price is in a relatively narrow range. We've got our floor here near 695, our green line, our red line here, 726, represented an old high. That was roughly where price kept topping out, but it was a little messier here. Now we have found that price has hit another ceiling near about 749. We can also see our white trend line is still in play here, starting with the point where things started to stabilize, connecting these lows as well. So a break below 726 would line up with our old highs and our yellow 21-day EMA. That would be the potential breakout point to the downside with support at 695. Then to the upside, 749. We can see RSI similarly poised for a potential breakout to the upside here above that red trend line there. And when we consider our standard deviation channel study, we can see that the +1 channel is a bit above where we are now, 763, so perhaps a bit more room to run here. But the heavy volume area largely lines up with our recent range here. So a move beyond that volume node would be potentially concerning for the bulls.
Okay, all right, Jessica, let's talk about the final name on your list today. You've got Caterpillar on your list. Look, this one has been an outperformer compared to the S&P 500 year to date, but do you see it turning into a beautiful butterfly?
Yeah, so I think it's possible, but there's also some near-term headwinds that are coming into play with Caterpillar, which could weigh on growth. Especially if we pull up, I searched with all of these, I also included earnings growth, and this one did not have the most promising there, but I do think that they can move back into growth mode once trade uncertainty clears and it's more tariff related. And we look at the Q2 earnings, for example, they showed power generation sales up 28% year over year, but there was weakness within construction prices, which of course fits into the overall macro environment. So once that clears up, those tailwinds are gone, then we're full headwinds and full sales ahead. Now, again, the search for these picks today is high quality dividend yields with potential growth potential. So this has an increased dividend yield of about 8.4%. Their annual dividend yield is 1.4. Their annual dividend rate is 5.74. And their cash flow per share is $24.19 with a payout ratio under 30%. So it checks all the boxes on the screen, and it also has some growth potential that I think could turn into a butterfly day. And as long as those tariff headwinds stop weighing so much on growth and we get more clarity on that, which I do think we got more on Friday, actually.
All right, Rick, you're up. Take us through what you noticed then about this chart for Caterpillar.
So this is another one where horizontal levels represented by gap openings and closings have come back into prominence many times here. So backtracking all the way here, our light green line, that comes in near 380. That was often a point where price hit a little bit of support there, but really our green line here where we had our gap level, that was a notable resistance area as well. So those were some boundaries that traders could have kept an eye on here. More recently, our dark green line 407 representing those highs, that was our breakout point, and that was where we tested support. So now the old resistance has become new support. We also have our trend lines showing slightly slowing momentum though. We had our blue line starting with the tariff lows. That has been broken. We have a more shallow sloping white line in play now. So still making some progress to the upside, but momentum is slowing as we approach these previous highs near 441. RSI notice as well did show some bearish divergence here, but now we've had the reset, so to speak. We stabilized around the 50 midline. We are still in the bullish territory here, so look for that further breakout. And finally, to consider other potential resistance, we have a similar theme here where our standard deviation channels are all lining up quite closely with our highs here for these stocks here. So the +2 channel in this case would come in around 444. We can also see that the volume starts to drop off significantly once we get below that 407 level that we highlighted here. Also lines up with our +1 standard deviation channel. So additional emphasis for potential support there as well.
All right, thank you, Rick. That's our Rick Ducat and Jessica Inskip of stockbrokers.com. Thank you both, guys. Appreciate it. Coming up next, we're going to spotlight McGraw-Hill following its IPO. We'll be joined by the company's CEO to break down its first earnings as a public company and talk the future of education with Simon Allen. That's next on Trading 360. Morning Movers brings traders the
Morning
biggest headlines
Movers.
to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Today's lunch, chicken barley soup.
Trading at Schwab is now powered by
I just love this soup.
Unlocking.
I mean, I can't stop making it. I made another batch this weekend. And in my Instapot with some corn chips. Not a very big batch of them, just a small. I've already had a few already. This is the best tasting soup I've ever made, and I just can't stop eating it. I got it down to a fine. Okay, here we got a 1, 2, 3, 4. We might make a little bit more. Let's look at the SPX, see if we can trade something different. We're at $1 at the 642s, 98. I might just keep trading this. We can come down and hit the orb, but I want to show you how to draw this out. Take the body, that's the last one, or you run it straight across. But we had some lower lows, so you want to take it to that body to that body. You got 1, 2, 3, breakout. Pull back is a higher low, and then you got an inverse head and shoulders right here. And these were at $1. These are the 642s. Now we're at 108, 109. There we go again, man. Smack it. 110. There's your head and shoulders with tweezer bottom. McGraw-Hill Company, MH. Never heard of them. They got some pretty good, they got a fondue restaurant at this resort. And most resorts don't have a fondue restaurant. So I'm looking forward to that. I'm going to get a barbecued lobster cooked on the beach. And then I'm going to try to find some lady out there that'll give me a back rub. I wonder what the average pay for. I don't think they make very much on that island. When I went to Jamaica, it was $8 a day. So the average wage, the average monthly salary, what? God, that's high. 10,000 to 35,000 Dominican pesos, which varies greatly in experience, industrial located, significant, or how much that is. The average salary in Punta Cana, average salary in Punta Cana is about $450. They don't say per month. I think it's $400 a month. Living wage in Dominican Republic. Find somebody and donate a couple $100 to just for fun. Some poor family. Let me see. What was the result? Average pay. Let's go average annual pay. Average annual. Average annual pay is under 10 grand. We just hit the right shoulder here, the third time, fourth time, just now. SPX. The 6450 strikes. Missed that one. I got the if you can count to 3, you can trade with me. If you can count to 4, we're at the sweet spot. Let's make more. $1.90. We got a megaphone pattern. So these are 64.50s at $1.90. We got a megaphone. We also got a Head and Shoulders. Here's the Head and Shoulders resistant. You just now run into the 63. And get out here at 215. That's $25 a contract. I was a little late on that. I could have got $1.60, $1.70. There's 225, 230. Bingo! Let's get to the shoulder. I'm gonna take profit. $2.25. So $35 times 5. So I waited for that. I waited for the setup. And I drew this out and I said I'm going to wait for it to hit it one more time. And I could have got that for 165, 170. But I ended up paying 190 and running it up and hitting the 63 and breaking that and getting out of the trade. It can easily come up and hit that right shoulder. And this is a Head and Shoulders. This is a two-headed snake. And it's 1, 2, 3, 4, counting that wick. That's the sweet spot. See, I only use the wicks when I need them, not to exit or enter a trade. There's 230. That was good. We just hit the head and shoulders.
Standing our ground, waiting on our setups to capture our crown. Stingy with his grace, we got a lot to prove. Patience is the key for Gamma Jama moves. Opening bell, here's the sound that makes it go down. Sneaky snake, carve patterns.
Moving average and being in the now. The now. All right. So we hit our target. That's the right shoulder the second time, right before the 200. I got more out of it, out of the breakout, than I did when it consolidated. I didn't trade it. I mean, I got in and out of it at 225. See, it starts to pull back. See, if I'd have relied on it hitting the orb, I wouldn't have been able to do it. Come on, you bitch. Now it's giving us another opportunity, and if we respect this right shoulder, or we got a new one right here, we create a new head and shoulders. So I don't think you have to be anal when you're looking at chart patterns. Moving averages and being in the now. Because right now you're sitting at a head and shoulders if you counted this. But I'm going to be patient and see if we can touch this again. But what, they're at 175, 170. I can hit 170 probably. But I'm going to wait. I think this is a little bit more stronger down here. Okay, get ready. Get ready. And I mean get ready. Now, being in the now means, what time is it? George. George. You ever thought about shaving? That wink ain't gonna work on me, buddy. You come to work, you shave. And he probably grows an inch of hair every 2 days on his face. Takes me 5 months. Come on, get on down there. We're in no hurry. I'm gonna put my alert right on these two candles right here.
Nothing for you.
Okay, get ready. Prepare ye at 160 in the name of the Lord. Bam! Triggered. Washboardjim's in a row here. You better pay attention. Woo! I get all kinds of soup. We're at 185.
Nothing for you.
I get all kinds of soup.
I cannot accept that course of action.
You will accept it. You'll do what I tell you to do, and you'll eat the soup that I tell you to eat. Right now, I'm up $25 in contract.
It's phony stuff. It didn't happen.
There's nobody out there that has a YouTube channel like mine that produces his own music.
Affirmative.
There's 190. $2. Patience, waiting for your pattern. 205. Thank you very much. God bless America. 225. Oh shit. I'm out. I can't take this anymore. But to the 200, to the right shoulder line. Oh, now he's trading Bollinger Bands. Is he calling me an idiot? He had to laugh. How dare you? RKT. We might break the 200 here. We might break the 200 here. Oh, we did. At the orb. I have to admit, I nailed Cracker Barrel, but I didn't trade it. I think that was a cute trade right there. I'd say I'm on fire so far today. I just don't want to overtrade. I got to sit around and wait for my package all day, so I'm more paying attention to the average salary. I don't want to know the average salary of a doctor at Punta Cana. Average pay for, I don't want to know about doctors. Cost of living and prices in Punta Cana. Average annual pay for, I'm going to take DR out and just put Punta Cana because they might think I'm doctor. The average annual salary in Punta Cana is around $5,400, $450 a month. So the people will really appreciate me when I get there and I start whipping out $10 bills. How much money should I take with me? Anybody have an idea? I think I'll throw out 5s instead of 10s. Anybody want to see what I looked like back in Homecoming King? We're at 240 now. Randy, did you take the trade with Bobo or you're already in it? We're at the 200 now. Oh, you just got home? $2.50. Well, I just left another $100 on the table, 125. Still happy with my call. I took this one here, and then $60, 65 a contract here. God darn it, 295. Now I'm, oh. Somebody's flipping the dirty bird in the room. See how we broke the 200 here and it came back and retested the old resistance? See that? We broke out of the right shoulder, past the 200, and it came back and retested that 200 and right shoulder. That's just a sign of strength. That's always something that you could pick up on. Instead of chasing, wait for it to pull back to the previous resistance. And I've said that many a times. And then take the trade. And it respected the 9. As long as it's above the 9, you're still bullish. This is one I should have held on some. At least a couple. Because this will be $3. Oh, Mr. Hickey is on.
Favor the hard data, even though I want
What are you whining again, Mr. Hickey? Because you didn't take trade?
Age pop back up to 6.2% in that number, and then present situation component slip and the expectations metric decline. Kevin, what stuck out to you in the data today? Because durable goods was a little bit better than expected. We all know that it's skewed a lot by Boeing and the aircraft orders at this point.
Yeah, for durable goods, it's pretty volatile. I'm not sure if you were kicking that to me, Tom.
Yeah.
Okay, cool. So durable goods, very volatile. That's one of the data sets that I discount. I mean, Kev has his own. Durable goods is the one that I discount because it is very hard. You can exclude defense and exclude airlines, and I think that actually did come in better than the street's expectations, which is a gauge for the consumer, but very volatile number to say the least here. Coming back to the consumer confidence data and talking about the inflation expectations for the next 12 months, we did see a move to the upside there, but also Jerome Powell also has now created a discounting mechanism on that data set when it comes to inflation, in my opinion, over the next 2 to 3 months. And if that's going to be the case, the market may actually look away from a lot of the inflationary metrics and starting to look more towards labor and as well as consumer sentiment. The only thing that you do actually see that's starting to align with that inflationary sentiment that we are seeing for consumers is it's starting to match up with the inflationary data just in general. If you're looking at PPI, CPI, import prices, export prices, they're starting to inch higher here. If we are able to keep it benign, that would be ideal. If we start seeing an aggressive ratcheting up, I think that does create a little bit of a problem for us when it comes to the treasury market as well as the equity market. But for now, we're holding up, and none of these data points really kind of will sway the market yet. Maybe PCE does, but we're pretty good at kind of timing what PCE is going to do here overall. So that's kind of how I look at these data sets. And we'll just continue to get them over the next couple of weeks, and we'll just continue to digest them.
Yeah, KG mentioned PCE data, Kev, that's due later this week. Expectations 2.6% year over year. That's supposed to be in line or the same as last month. And then core is only supposed to go to 2.9 from 2.8. I mean, these aren't out of the ordinary inflation numbers to the upside, but they still kind of convey the fact that they're still resilient at this point and they're not going down.
Well, you're right, but they're also not going up significantly, right? And I think that's, if you're the Fed, that's what you're looking for. You can allow for inflation to come down.
Oh, shut your mouth. So here's Rocket. Reports the mortgage spread has dropped to a 3-year low. That's good news for home buyers and refinancers. Home buyers benefiting as mortgages spreads drop. The liberals love high mortgages. So we've got rocket here. We're at a two-headed snake. And we got a triple bottom. So I'm going to put an alert on the triple bottom. I might go long in this. It's already had a bounce. So right here's another head and shoulders. So I'm going to run a price line across. And then I'll set my alert right above that shoulder line. Whoops, I didn't want that one there. Whoa, SPX is at 320. Whoa, we just hit the top of the megaphone. Ladies and gentlemen, prepare ye in the name of the Lord. We just hit the head and shoulders megaphone pattern. Just think if I'd have kept that at 160, that would have been a 100% trade. What do you have to say for yourself? I love you, Trump. Woo! Double top. Break it. 390. I'm gonna make some money. Oh yeah. Oh Lord, won't you buy me a Mercedes Benz? Nancy, are you back in the bathroom again? Huh? Can you tell me why? Why are you always in the bathroom? Nancy, what are you doing in the bathroom, baby?
At 17. Let's see, analysts expect Apple to release.
Nancy plays a game. Everyone loses but her. Nancy doesn't care. Nancy only wants more. She doesn't even see you. Jim's gonna shit on your face. Retail traders gonna
Sit on your face too.
just for
Being you. Yeah, just for being you.
Little people scream, but she can't hear in her tower. So high, it's all a blur. The pain below. Does she even know the damage done, or does she sleep so sound? Never a frown. Jim's gonna shit on your face. Retail traders gonna shit on your face too, just for being you. Jim's gonna shit on your face. Retail traders gonna shit on your face too, just for being you. Just for being you.
How to use autocode.
Ah. 5:15 to 8:15. You've got to be kidding me. Arriving today at 5:15 to 8:15. Tonight's my long night. I'm usually in bed by 6. God, I wish I'd get it to us earlier. I'm going to go ask the landlord when the doors lock at night. I'll be back. It pisses me off.
that gap to the downside. It hasn't been able to pick itself up off of the map, but trading near a key area of support. So I'm actually looking at a put diagonal spread.
I'll be right back.
To the September 5th, buying that $90 puts and then selling the August 29th $85 put finished for a debit of $2.60. So the max loss on this trade is $260. You'd like to see is skewed, obviously bearish. You'd like to see the stock move to the downside post earnings and really trying to capitalize on that downside move, but leveraging the high implied volatility on the near term expiration, which is expiring this Friday, to offset some of that premium for the longer dated put option. So this is obviously directional, leveraging on the on implied volatility, but also just looking at the technicals and looking at that $87-ish area. And if they do disappoint, you could see another massive, move to the downside. And companies within this space haven't reported the best earnings this cycle. I'm not sure if Okta's going to be the one to be able to buck that trend.
Yeah, it seems like even some of the names within this cloud or software as a service type of sector is that even if they do report positive EPS, positive guidance, positive revenue, we've seen a lot of these stocks actually pull back. But let's break down Kevin's example trade here. September 5th, a weekly option, expire in 10 days. Buy the 90 strike put, just out of the money to the downside. And in the near term, August 29th, weekly options that expire in 3 days. Sell the 85 put. Bearish, $5 wide, put diagonal to the downside, paying roughly about a $260 debit. That's going to be your risk, $260 per spread. Anything below about 88.5, 89 is going to be potential profitability on this one. The option market, Kevin, on KG's trade, option market's pricing a plus or minus $10 move either way in the shares on this one. So pretty big expected move, but this vol dispersion, almost takes the price of this put diagonal down to about half the width of the $5 wide put diagonal. So that's a benefit, right? Because of the dispersion and implied volatility.
Yeah, the calendar spread aspect of this trade with the embedded vertical spread that makes it the diagonal gives it much more teeth on the downside, Tom. And spending about $2.50 because you're buying that 1 week spread that gives you the ability to sell that front expiration, that bloated implied volatility. Yeah, Tom, it gives you a big theta number, and it gives you, like I said, you're only spending $2.50 for a $5 diagonal. That can go a lot higher than $2.50. So this is one that you don't have to worry about that going up like the calendar spread and coming all the way back down. It'll stay flatlined on the downside, Tom. It's got about 11.5 short deltas. That'll get bigger as it moves towards 85.
Yep. And that vol dispersion that I talked about, selling about 157% implied volatility on aggregate in the August 29th weekly options versus buying about a 98% implied volatility on those September 5th weekly options on the 90 strike put that you're buying. Because you look at this, yeah, you're paying less than the width, so even if you do get that blowout move to the downside, maybe it goes one standard deviation down $10, you're going to still be profitable on this one, right?
Exactly, because the spread's $5. You're paying $2.60 for the spread, so you still would be profitable. The biggest thing is trying to manage the trade after. What do you want to do? You want to roll the short strike and try to make it into a vertical spread and take in a credit? Do you want to take the trade off completely? If it does go against you and the stock goes up, what do you want to do there? I mean, there's a lot that you can do with this, but when you have a stock like this that can be very volatile, as you kind of talked about here, selling credit spreads, call spreads or even put spreads to the upside or downside gets a little bit difficult because we know the stock can move, and that's where it puts you at a little bit of a risk. So trying to leverage the time itself or the time structure itself kind of reduces maybe some of that risk that you could have versus selling something that's straight outright call credits or put credit spreads.
Yeah, and that's that's the way, one of the ways you have to look at this, that hey, I've got 10 days of my long option, so even if I don't get the move initially dead to the downside because the apex of profitability at or near that 85 strike put, which is about $6 out of the money to the downside, you still have time in this one to potentially manage this trade or close it out ahead of expiration. You do have some side risk on that short option over the next 3 days also on this one. But good look at the example trade here. Bearish, put diagonal, taking advantage of those volatile levels between option series. All right, thanks to Kevin Green, Senior Market.
Kevin Green
joining us. But coming up after the break, we're going to be joined by Andy Swan from Likefolio to look at sentiment data in Abercrombie and Fitch. The retailer stock is down over 30% this year into their quarterly report tomorrow morning. Stick around.
Beautiful charts today.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab. Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. That's going to be Andy Swan. He's a co-founder of Likefolio. Welcome back to the show, Andy.
Thank you.
So it seems like, Andy, just over a year ago, we were talking about Abercrombie and Fitch, and the shares were spiking to all-time highs. It was the hot apparel retailer out there. It's pulled back about 33% so far this year. I mean, it's been under some pressure. Is this just different tastes in consumers? Are they the company executing wrong here?
No, I think the stock just got ahead of itself. Now I think that we're starting to see some signal that Abercrombie's in the right space at the right time, and I think they're going to be in a pretty good spot.
I just got it out of prison.
12 months, and one reason why is the Hollister brand. This is the teen brand. It's really powering the company's growth engine. It's offsetting the weakness in the flagship brand, which is Abercrombie, and capturing market share as peers falter. Hollister web visits up 57% year over year, which is outpacing Urban Outfitters and Anthropologie. People really like what Hollister's offering. That's this move away from athleisure and towards denim is very real, and it's not just Sydney Sweeney's great jeans that's driving this move. It's actually kind of coming from the bottom up of the fashion industry.
And that chick yesterday was bashing it.
On this bandwagon as well. And so
Jenny.
Hollister's in a really good spot. We see Abercrombie & Fitch kind of keeping up, turning around a little bit, and I think the stock is heavily discounted here. Q1 sales were $1.1 billion. They raised full-year growth guidance. But like you said, shares are down. I think there's a lot of tariff fears here, but the company seems to be executing against that pretty well. They've got
Head and shoulders right now.
Partnership is starting to gain traction, but overall, I think the big story here is that they have the hot teen fashion brand, and anytime you've got that, it's really worth noting, because that's a lot of times where fashion movements start.
He's a little late on the snake.
Built from that kind of bottom up, and so Hollister doing all the right things, we think, for Abercrombie & Fitch going into earnings here.
Andy, they have the hot fashion trend again, right? Is part of this nostalgia, or is part of this big box versus small premium stores? Is this mall versus big box away from the mall? What do you think it is? Or this company, despite what
And we could get a double bottom here.
buying back a bunch of stock,
Back to the
they're
63
managing
if it don't hold the
business
200.
extremely well. And if they've revitalized these brands, heck, I just bought a pair of Nike waffle trainers that Nike has brought back on. So what's old is new again, Andy, and nostalgia is a real thing. And I just want to know, is that working, right? Are they reinventing themselves and bringing that back? Because these brands, I've got older children, and this is what they wore, and now they're back again. That's a pretty good story.
Yeah, it is.
Yeah, I agree. I think you hit on a lot of key
You did hit on
I
it.
think nostalgia is definitely.
I gotta get some water.
There's this,
Go through it.
growing sense of loss.
syndrome
I think,
today.
that is resonating across social media, whether you're 50 years old, 60 years old, or 15 years old. You kind of look back at some of the clips and videos and movies and music videos from the 80s or early 90s, and there's some nostalgia there on the way that the world worked at that point. With people weren't looking at screens all the time. They seemed to be smiling more, having more fun, and look at the way that they were dressed. There's a lot of denim. I also think that there's just this move. Athleisure is just very played out. I know when you think of Andy Swan, you don't necessarily think of a fashion-forward icon that's going to lead the charge. But I have been calling for the end of athleisure for about 4 or 5 years now. It's really played out. I think people want to get back into something a little more fun, a little bit more durable, a little bit less, maybe I don't know if provocative is the right word, but leave a little bit more to the imagination. And I think that's really taking hold. And so the brands that are in that space, like we saw with the Sydney Sweeney, it wasn't just Sydney Sweeney coming along, and she's fantastic, but it was let's get back to jeans, let's get back to cool denim trends. I think
Let's get back to the fanny pack.
Kind of just in the right spot to take advantage of that, and Abercrombie's doing a fantastic job of leveraging it.
Yeah, they
Andy,
are.
You mentioned, last quarter, 22% growth for their Hollister brand year over year. But do you ever wonder with a company like this, where I always look at Gap as a perfect example, where maybe Old Navy was doing really well and Gap was doing horribly. Then Gap started doing a little bit better, but then they started losing market share in Old Navy. It just feels like even though Hollister is growing and they've got that great engine on that part of their business, is there some of that cannibalization going on here maybe? Or is, as you mentioned, American Eagle is probably going to do pretty well due to their, some of the exposure that they've gotten. Is that also, a worry right now for investors?
Yeah, it is. I mean, you got to figure out who's winning, and in order to figure that out, I think one of the best ways to look at it, and not just who's winning now, but who's going to win into the future. And I think a lot of times, not always, but a lot of times, who's winning in the future is determined by who's winning the true teenage market now. And I think Hollister's doing that, so that's why we get pretty bullish on Abercrombie here.
What's your earnings score on this one going in, Andy?
We're bullish on this. 43, we think they're going to have a good report.
Oh, 43, that is a high one. Anything above 20, bullish on that one. All right, great stuff as always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder of Likefolio, breaking down ANF data. And as I mentioned, Kevin, stock's down, 33%, off about 40% from 52-week highs. I mean, this stock was nearly $200 last June of 2024 when we were talking about it. It seemed like every day the stock was going higher. But maybe this is some opportunities, as Andy mentioned.
There's a lot of things that point in the right direction for this company as long as they execute, right, on the bottom line, because they are, Tom, look at the float, 47 million shares. That is not big. That is very small. Number one, they've got virtually no debt on their balance sheet, and they're buying back stock. That being said, you're right. They are down significantly, and this is one that's just kind of sitting there. So how do we play it? Well, I'm going to do what I refer to as the reverse Kevin Green trade. I'm going to do the bullish diagonal trade, Tom, but I'm going to go out 2 weeks. I'm going to give myself the ability to extend duration one time if I need it, Tom. So I bought the September 12th 100 call, right, pretty much at the money, and then sold the August 29th, this week's 110 call. So about $10 wide. Tom, look at the expected move on this name. It's about 12%. That's a big expected move. So traders are expecting a big move here, Tom. I spent about $4.40 on this trade. It's trading about a dime higher than that now, between a nickel and a dime higher. But Tom, this one gives you that upside exposure. Again, just like the opposite of Kevin Green's, about an 18.5 delta, collecting a fair amount of theta, Tom, and the risk is the debit paid. You're paying a little more for the risk, right? Because you're out another week, but not much more, Tom, as I'm $10 and Kev was $5.
Yeah, you went out an extra week on your long option, then you widened out this call diagonal here to $10 wide instead of $5 like Kevin's. And as you mentioned, the option market pricing in a plus or minus over $12 move, 12% move in the shares post earnings. But let's break this one down. September 12th, weekly 100 strike calls. You're buying that one. And then in the near term, August 29th, weekly options that expire in 3 days. Selling the 110 strike call, bullish, $10 wide call diagonal, paying roughly about a $4.40 debit. There's your risk, $440 per spread. Anything above about 102, 103 is going to be potential profitability on this one. So you do need a move higher, and you can see here from the risk profile, the apex of profitability at or near that short strike, the 110 strike. But because it's a $10 wide bullish call diagonal, you're paying less than half the width of this call diagonal. So anything above that those break evens, about 102, 103, is going to be potential profitability on this one. You see from the risk profile there, that 110 strike is where it tops out. But anything even above there, if we get a 2-3 standard deviation move to the upside, it's going to be profitable. But Kevin, you mentioned as we get closer to expiration over the next 3 days, you'll have that opportunity or potential to roll or adjust that short option, or if you get the move where you want it up to 110, 115, 108, and this thing expands in price, you could also close it ahead of time if the market's open, right?
Yeah, exactly right. You're long 2 weeks out and short this week, which means if you don't get the move you're expecting, you can extend duration, chip away at the net debit, chip away at the break even. Obviously, if it goes up to your strike and your opinion is that it's run its course, you can close it. If you don't, if the news is good and you think it could go further, you extend duration on the trade. And by the way, when you extend duration, you don't have to sell the 110 call. You could buy the 110, sell the 120 if that fits your opinion, Tom. So when you roll, you can roll to any strike you want.
You can.
And the difference might be if you're taking.
I gotta learn how to do that roll, baby.
You might be taking a credit. If you roll up, you might have to take a little bit of a debit on a trade that's already working out. So there's some trade management that might be needed over the next 3 days. And you do have some assignment risk on that short 110 call in the August 29th options over the next 3 days. So keep that in mind. All right,
okay, SPX.
Diagonal. Going opposite of KG's trade to the downside on Okta, but let's take another.
What is that? No, that's that. Oh, that ain't SPX. That's a
software database stock down about 9% this month, and is severely underperforming a lot of its peers and the sector into their earnings after the close. Stick around.
Cracker Barrel. Well, I'm not going to wait. I'm not going to do that one. Resistance to break on the SPX. on the 1 minute time frame.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at MongoDB ahead of earnings, let's get a quick market update. Stocks are at session highs, creeping just a little bit higher. We're all now positive, all four major indices. Benchmark S&P 500 up just over 0.1%. The Dow up 10 points only, fractionally higher. NASDAQ 100 now up 0.2%. And the Russell 2000 up nearly 1% on the day. So seeing a little bit of bullish activity here. You can see from the heat map here, NVIDIA's having a nice day. Eli Lilly's having a nice day after another study release on their oral GLP-1 drug. But yeah, I think this is all going to be, you got to watch that top left corner there, NVIDIA. That's going to drive probably equities for the rest of the week into their earnings tomorrow after the close. And we're going to talk about NVIDIA a lot tomorrow. But right now, let's talk MongoDB, ticker symbol MDB. Let's bring in George Tillis, Senior Markets Contributor here to help us.
George.
This one, the software as a service company, George, been underperforming pretty severely. I mean, they've still got some high valuations. Is that why the stock's been under pressure? Are they losing, customers to competitors? What's going on here?
Well, it's a kind of a tricky situation with Mongo. I mean, I think first, if you look at the trend, at least in the last year, the stock has been underperforming. In the last 5 years, in fact, the company really hasn't done well as a price, from a price performance standpoint. So when I looked at this one, it's kind of interesting because if you look at their business, it's basically a software infrastructure and database management company. What's nice about their technology that they market, and they've got 46,000 clients that use their software, is it's more open source in nature. So there's customizable features, and of course creators and programmers can customize their needs based on the software. But I think some of the competitors that MongoDB has been facing is increasing their open source programs.
Okay, we got a double bottom coming up on SPX. And the 200 EMA, because it doesn't want to hold. Coming to our first support. Are we going to hold this is a question? No, shit is my thingamajigger. Okay, you ready? $285 to $330, $320. So we retested support again. God, now they changed it to later, 8:45. Oh man, why do they do this to me? Oh, I got a gift card? How do I use it? I had two of them on there. We broke it. Wall Street is more focused on NVIDIA than it is the threats of Fed independence. Sound like a very nasty alert. Well, it's going to get tired of coming back and hitting a 63. We got SPX coming down for the third time. Get ready. Boom. There it is. The $2.10. We could hit the 200. This is the bottom of that channel. don't hold here. Come on, you idiot. Do it the right way. Boom, baby. Nailed it. No, I can't find that frickin'. Where are you hiding from? Nailed it. It's probably going to go higher. I got out of it 240. Yabba dabba doo. Funk's on here. Now we are showing some signs of weakness. We could, if we don't hold the 200 the second time, we could hit the VWAP on the ES. Maybe. And this green line's a channel that I had on SPX. Channel support. Almost have to clean this thing up again. You know your mic's on, don't you, Funk? It should. He's not muted. Okay, we're back to the right shoulder here, the head and shoulders now. We've made a head and shoulders on the SPX. So if it wants to stay bullish, it'll come up here and hit this resistance line. I'm gonna go make me a chai tea. You thought about walking around the building? Might go out and walk around the building once. Be right back. Oh, we're going to extend that to the right. Right now the SPX is in a bull flag and we got a inverse head and shoulders to the right shoulder. So if it comes down one more time, I think that's, if it does come down there and hit that, that'll be the last time for the bullish pattern to work, or she'll drop and hit that 200 again. Or she'll break out here, one or the other. I'm not in it now, I got out. That's a pretty good call off that 200. And that bull flag, I mean that Darvis box is about to go to the right. I wonder if there's a way you can extend that to the right. No. That'd be cool if you could. And we're about to hit resistance. What do you think of that? 275.
He made that airplane so cheap for me, I couldn't help but buy it.
Tick tock, tick tock, tick tock. We're about to hit resistance again. Boom, double top. $3.70. Sharp little drop right there. Back to support. We'll get my tea going. I'll be right back. I don't want to push my luck. Oh, looky, looky. We're definitely here now. Alerting. Where would I add it? We're definitely at a support level here. I definitely would think about adding it at 64425. We're at the 200 EMA right now. Okay, I'm getting ready. I think we could hit the 200, but we're getting here real close. $195. Okay, time to tense up. Might be in a little bit too early, but we'll see here. God darn it. Okay, Randy, we're at that second support. First one I mentioned. There's the third one right there. It's 160. Come on now. Come on, you idiot. Fuck. Now we've lost support. All I got to rely on is double bottom. We're at the top of the orb on the /ES. Could hit the VWAP on the /ES if we don't hold this support. And I gotta stop out. I ain't holding these suckers like I always do. Not when we're at these levels. This is important. We break this here double. We hold the double bottom. I gotta see if there's a. Come on. Very tight right here. Randy, you still in it? I don't know when you got in. Oh, you just went in. I thought you were adding. We got a double bottom, so that's, you know. Just got to hold the double bottom or you get out. Because we could drop on the /ES to the VWAP. We've hit that 3 different times. I get stuck in most of my trades right around here this time of day. So I could go ahead and retire and be done with it by 10 o'clock, 11 o'clock Eastern. Come on, you bitch. Come on. We got a heck of a wall to break now. Shit. We're at the orb right here. Oh, Jesus. Well, they dropped that. I question the market makers. They want to break it down. We got a long drop now. It's a pretty good drop. Once we broke the orb, we keep going. It doesn't have to stop here. We could, I mean, we can come down to a double bottom, the bottom of this here megaphone. And that's where we called that big bounce at. Right now, you're on the top of a new channel. That's it. Okay, I got a double resistance here to break. We break this here, this is a hard resistance. Think harder than the other ones. The orb. I gotta get my tea going. I'm still in my original one, but I'm scalping the bottom here. Kind of risky. And I've added to my original. We're at a, we got a wall ahead of us, that's for sure. $135. I'm about even. Either get out of them now and save my ass some money because I'm loaded on these things, and if we break, it could be very generous. But I'm not very bullish. Not after that little episode. We hit the 63. We also we break past this wall. We're squeezing right now between the 200 and the 63, so it's definitely hard to break. And the 9 hasn't crossed the 21 yet. There's your inverse head and shoulders. Right there. Kind of doesn't know what to do right now. Let's see if I can walk away for a second. It'll be hard, but I'll do it. Okay, I'm back to where I'm even. And all we got to do is break that 50. Dad, I don't know what to do. This is a hard resistance right here. Fuck. Simon says hold. Simon says, Confucius says hold. Jimmy says sell. Back to what? 6448. I see something a little bit lower, Bo. What are you talking about, bro? How about a little under 6447? Well, it ain't moving. The price ain't moving on that fat candle. That's bullshit. I'm out. I can't take it. Come on. Come on. Give me 170. There's 160. There you go. Ha ha! Woo! I'm happy. I got 180. Oh, shit. Rock boom. $180 and $215. I'll take it all. I had a lot of them. Too many to handle. God. Okay. We hit my head and shoulders. Did you get out of your calls, Rob? I had quite a bit. I had 18 of them. I'm gonna go make my little tomato salad now. That's what I'm gonna have for lunch. I didn't get to lose all my weight I wanted. I wanted to lose 5 pounds and I lost 3. So I'm gonna say the heck with it. I'm gonna eat fondue for the first time. So I'm excited about that. Well, that was toughy. That was a toughie. Job, Randy. Oh boy. Man, if I'd have held them. Oh, the god dang, 18 times what? $130 is $2,300. Rob said back to, there it is. I was getting ready to tell you that. It's too late to donate for my vacation, you tightwads. Tightwads. I sacrifice 8 hours a day for you for 3 years, 4 years in a row.
Thank you very much. That's really nice. Thank you.
I'm gonna go make my salad. That was tough. Well, I'm glad I didn't sell them for a loss. That's incredible. That's what I'm eating now. Tomato, pickled onions, and cucumber with dressing. Italian. Sweet pickled onions. That's all I'll eat tonight. Fast until in the morning. That light fixture in the front door, when you try to screw the bulb out, it's real loose, and I'm afraid I'll pull a wire or something. There's some kind of issue with it. $4.10. Damn. Oh my. 274 in profit times 18. God, it's almost $5,000. It would be in $5,000. And I almost doubled down on that. And that'd been 27 contracts. Oh, that would have been killer. Golly. This crap I made ain't too bad. Never had that before. And sweet onions. I'll be eating high on the hog when I get to Punta Cana. I'm mostly excited about that tofu fondue. I've never had that ever. I guess it's cheese. I used to work at an old Chinese restaurant, one of the first jobs I ever had. And Mr. Leong, he invented the cashew chicken out of Springfield. And he'd bring in a live catfish, and throw it in the wok. And I'd see that thing flop around in there. I said, "What the heck are you doing, old man?" "Oh, don't worry about it. You go cook 2 pound hully, hully, hully." I said, "Hully, hully. I need 2 pound hully, hully, hully." And the way you cook hot rice, is you rinse it out 8 times to do it the right way. And then add your water, but you got to rinse it out 8 times. Then you cook it for 10 minutes, boil it for 10 minutes, and then let it set. Turn it off. How the hell do I? Hello. Rick told me to pass this on to you. I replaced all the light bulbs on the outside. The fixture on the front door is kind of loose right now, and I'm afraid that if I try to move the bulbs around, I might pull a wire or something, but I think it needs looked at. You'll see the light fixture that's not working. It's right in the front door. Let's go! Woo! There she goes. Nobody knows. Hey, hey, hey. There she goes. Hope they got good coffee there. what a breakout. So glad I didn't get scared in that trade. I forgot what it nailed. Oh, the double bottom. Tesla may back up to that double top, I think. Yep. So we got a triple top on Tesla. Love is in the air. Now that was a nice little turnaround there on SPX. Right off the 21 EMA.
In the morning, coffee in his hand, 9:30 bell rings, he's got a plan. Sneaky snake moves, slither through the charts. Washboardjim's the mentor, teaching trading odds. Gamma exposure, man, the pressure's tight. Breakouts hit, gotta catch that flight. Key levels flash like neon signs at night. Living goose on the grind, his aim's in sight. Sneaky snake strategy, wiggle and weave. Living goose don't stop, he's got tricks up his sleeve. Charts go wild, he don't get deceived. To stack those gains, it's a game he believes. Washboardjim's got the rhythm of the trade. Don't chase the hype, let the setups cascade. Goose nods sharp, eyes on the prize. He's dancing with the market, watching lows and highs. Gamma squeezes lurking, keep you cool. Respect the levels, that's the golden rule. The market's a jungle, it's a beast to tame. But Goose and Jim, they're ahead of the game.
Best rap song ever.
Painted on the screen, trades hit clean, it's a money making scene.
On the outside.
They're ahead of the game. Candles flicker, green and red glow. Strikes waves like a process flow. Drops like a feed, painted on the screen. Trades it clean as a money you can see.
As you walk out, it's the first light on your left side. And I put new bulbs on Rick's desk. We need to order them. And I put the bulbs that they use on Rick's desk. We are out of stock now. Okay. Well, these guys tried to tell you that we were doomed and gloomed on CNBC and Schwab. I didn't agree with them one bit. It seems like you get in a panic mode when we have a pullback. And it's expected in August and September. But, you know, it's not like it used to be. Used to be was mandatory. But now that the retail trader has hit the scene, it's not the same. They try to make it out like it is, but it's not. I'm telling you, because I know. I've been here every single day for 24 years, 22 years. Actually 20, 21, but on and off for that first couple. AMD pulled back and hit the 200 and bounced. We're about to hit resistance on the /ES. Ladies and gentlemen, we're about to hit resistance on the /ES. I think we just did. 64.69.20. Do you have a problem? Tell me. Randy, do you have a problem? Say no. Here he comes again. Hot contract, ass side, hood. Turn, boy, that was a good trade. That was a huge megaphone. Wide lip megaphone. Ooh. 370 to 540. Yeah. Now they changed it to 645 to 845. Come on. Heck, I'll be in bed by then. I'm waiting for a delivery. Amazon, golly. Some ninja might come by and steal my package. Okay, well, it's post power hour. I'm in La La Land after that last trade. Slash ES did hit my resistance level and pulled back. I'd say pretty much to the penny. Let's see what Snooty Jenny wants to say.
As far as the hyperscale customers are concerned.
Yeah, it's important, I suppose, because of the way that it's certainly been characterized in the past. I mean, certainly playing, second to NVIDIA, almost as like a sort of second fiddle. So, no doubt AMD has had to prove itself there. So that is a positive story. And last but not least, we've got some earnings on tap after the bell. Can you run us through what the street is expecting for Okta and also MongoDB?
Ultra.
And an important reminder, there are other earnings out this week, as I keep saying, because I am very much focused on NVIDIA, but Okta, MongoDB still with earnings out after the close. Now, Okta has actually received a lot of analyst love this week as we got Canaccord upgrading shares to buy from hold earlier today. Price target raised to $120 a share, saying that their conversations do indicate that calendar second quarter strength for the software group has continued through July, and they're generally constructive on now these demand trends for the firm's coverage really heading into the print. Okta has also seen benefit from a pretty rich partner base that includes the likes of like AWS, CrowdStrike, Google, LexisNexis Risk Solutions, as well as Microsoft. And the company has more than right now 7,000 integrations with cloud, mobile, and web application, as well as last month announcing this expanded partnership with Palo Alto Networks that combines their identity workforce as well as Palo Alto Networks Prisma Access browser. So consolidation in this space has been interesting, and it'll be curious to know what that looks like for the remainder of this year. But we saw a pretty massive repricing, frankly, following its May quarter report that since they have not been able to recover from. So hopefully earnings could be, an upside catalyst here. Now, MongoDB, on the other hand, has also seen some pressure as a lot of these software and technology names do remain relatively under pressure. Street is expecting right now adjusted earnings of roughly 64 cents a share on revenue of just over 551 million. And a bit more of a mixed picture as far as like overall Street coverage right now and what we've seen from just the historical performance of MongoDB. The average rating still does remain to be buy, and price target right now on average is 276 a share, which indicates about 26% upside. So there is still strong conviction in both of these names, but MongoDB, a bit of the laggard of the two on the year, down about 8.7% and a whopping 42% off high.
God, now 7 to 9 o'clock.
Could be the reprieve that I think shareholders are hoping for. We'll at least get those numbers and some financial clarity.
Can't you guys do better than that?
Awesome stuff. Thanks so much, Jenny, for getting us across those really key stories for the markets today. Jenny Horn there, appreciate your time. All eyes are on NVIDIA this week ahead of the company's earnings report out tomorrow afternoon. And joining me now to preview the numbers is Christopher P. Davis, a partner at Hudson Value Partners. Thank you so much for your time, Christopher. What are your expectations? I'm seeing the street is estimating revenue up 53%, EPS growth of 48%. What are your thoughts heading into this?
Yeah, thank you for having me. My thoughts on NVIDIA, most important stock on planet Earth, it seems these days, and in a big part of the market. What I'm looking for is just to see what exactly those margins are going to be, because I think that's really the question that we don't have an answer to going into earnings. NVIDIA is unique in that most of their key customers, the big hyperscalers, have all already reported. So we know from a sales perspective, this past quarter is going to be strong. Expectations are high going into Q3, and none of the hyperscalers have offered any indications that they're slowing any sort of AI-related spending. So just really want to watch that margin number to see if they can maintain those high levels. Consensus is looking for somewhere around 72% on the gross margins there. So that's one number we're keeping an eye on.
Okay, so that's the metric that you're going to be zooming in on. As far as the reaction, I've seen the option market shows that it looks like we could see a 6% implied move from NVIDIA's post-earnings reaction. What do you make of that? I mean, particularly as far as, setting the tone for the broader tech sector.
Yeah, we're entering into a seasonally tough time for the market. September and October are typically, not the best times to be in stocks. And I think Nvidia has the opportunity, if they can, tell us that bull case for AI and the bull case for tech is alive and well, that can smooth things out. If they wobble, if there's any sort of questions, if they throw in any more sort of risk factors around trade, regulation, U.S. government involvement, things like that, the market's going to judge them harshly. I mean, this is a company that on a PE basis is expensive, but on a price to sales basis it's an incredibly demanding number.
This guy's still
30
thinking of the
times
past.
sales. So they have to keep the pressure on, and at some point they're going to run into the law of large numbers at a 4.4
Who is this
trillion
guy?
market
He's a
cap.
young one.
I don't know when that's going to be. It doesn't look like.
He's worthless. It's not the best time to be in stocks in August and September. I was just talking about this.
Just wondering, the big wild card now that many are questioning, China. I mean, how much of a risk is this right now?
Well, it's certainly interesting that now they have to cede 15% of their sales from chips they're selling to China to the United States government. I mean, that's not great for margins right there. And there's also the back and forth as to the Chinese saying, well, we want to get your best chips. We don't want to get the slightly detuned version that you've been selling us. But we are starting to see from some of our sources out there that things are picking up a little bit in China. So that could be a tailwind for not only Nvidia, but the broader global economy as well. I think the one big risk factor I'd like to flag on Nvidia, and I'd love to hear CEO Jensen Huang talk about, is just the U.S. grid power infrastructure. Because if they're going to keep selling the amount of technology that they are selling and that the street is forecasting them to do over the next several years, there needs to be somewhere to plug it all in. And I don't think there's enough spending on data centers, power, the grid to make this all.
Sorry, sir, but I can't listen to you. You said something I didn't want to hear. You made me real mad. And the video's pulling back to the 200. Oh, my tea. Wise men say you're a full double top, and I can't help but falling in love with a megaphone breakout. We have another megaphone. It's extended to the upside. Wise men say you're a fool to megaphone, megaphone, megaphone. It's all alone. No, it's not. 'Cause there's one right there. Oh, you're still on? I don't want to listen to you. Don't make me go to CNBC. Oh, look at that! Woo. We're coming close to resistance. Time to get puts. $7. $3.70 to $7. Oh my God, $8.20. I'm out. I can't take it anymore. I can't take all this winning. $3.70. $3.70 to $8. Yum yum. Yum yum. That's the SPX. So right when I drew out the megaphone breakout pattern, I counted to 3. Umbus, 2 bits, 3B, 1 2 3B, 4. So we came down and we retested the third spot. I'm not counting that one, counting that one. And we came up for the 5th time and broke out with a big boom. Do you understand? Oh gosh, $9.80, $11.40. Are you kidding me? Just like that, I left $300 on the table. Damn. Wow. Time for puts. Rob, the 64.60s at $3.60. You got a problem with that? Come down now, brown cow. I want to make a couple $100 off these soldiers. We're now at $4.20. You were warned. 460. There it is. Well, we have 32 minutes left in the market. We have a double top. I don't think we can go higher. We'll find out real shortly. Lies men say God, what happened? Oh, it did break out. It's at 290. Washboardjim, should you take the triple top and buy the puts? No. You might be down 95%. Then what would you do? Would you sell it? No, I can't. No. God darn it. You wouldn't believe where these things are now. In the 64.50s. Well, well, well. The two ugliest people are engaged in the world. We're going to go back to support off the megaphone. I'm done trading. I'm about wore out. There it is. $1.20 contract, but I didn't take it. At least I saw him at 270. This is 64.60s. Could stop here, but I think it was going to hit that. And it just might collapse. There's 440. That could be $200 contract. This thing drops a little bit more. $450. I'd be out of him by now. There it is. Right to where I said it'd go to. Now it might bounce up. This is a solid, what was resistance now becomes support. There it is, 530. Dadgummit, Jim. 270 to 530. 550. Make it 570. $590. There it is. $300 a contract. Stupid. God darn it. 690. 710. That really upsets me. I should have took that trade. 2 contracts, I'd be up $800. God. That was plumb dumb. They're still talking about the September rate cut. See, I don't like watching CNBC anymore because it's just snooty. They're just snooty snobs. I feel more comfortable with these people on Schwab. And they always get it wrong. The snobs do. 10 more minutes. This is the 10-minute alert. The 6460s, 20 cents to 190. I didn't take them. God. There's $1 right there. Triple top. That's not a triple top. Well, it's a double top. Could be a triple top. It might be a triple top. Look at that. Oh my God. 20 cents to $4. I call that a triple top, you skink. If I had the balls, I'd buy a put right now. Oak. Ooh, triple top. It did it. It sure did. Now it's definitely resistance. You see how I did that to find a resistance level? Went from that to that body, and then that wick hit it. Man, if I'd win them 160 still, that'd be a miracle. We have 4 minutes left. She broke the triple top. Pretty strong close. Alrighty. Well, I'm done for the day. I've had a ball. It's been a lot of fun. Been a lot of fun. So I'm going to take back and relax a little bit. Watch a few YouTubers and go out and walk around a little bit. My butt's a little sore sitting here all day. So, great room, great teamwork. Great teamwork. Some of the best teamwork I've ever seen in a room. We get along, we don't fight. We're not we don't have big egos. And that's what I appreciate. You know, it's hard. I've seen so many egos in my time. You know, I'm the best, and this is that. And it gets annoying. It's good to let people express themselves and become better traders. And learn. So, hats off to everybody.